Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Time frame, most importantly, Aussie CAD broke outside this trading range, okay, and we've been looking for a pullback. So if you recall,
into their trading. So regarding position sizing, the size of each trade relative to the total account balance plays a significant role in risk management. The larger the position size, the higher the risk of a large loss, especially if the trade moves against the trader. Okay? So again, high risk, high reward. The bigger the size, yes, the potential for the bigger gain, but on the flip side, the bigger the position and it goes against you, the larger the loss you are going to realize. Okay? So example, if a trader risks 5% of their account on one trade, a single loss can drastically reduce their capital, making it difficult to recover. A more conservative position size might risk only 1 to 2% per trade. Some as low as 0.25% to 0.5%. Okay, this is not like just predetermined 1 to 2%. You can start off with 0.25%, see how you move from there. You can slowly go up to 0.5%. Then you can make your way up to 1%. But remember, it's always best to start the lowest point and work your way up. It's not advised to start on the high end and then you work your way down, right?
Hey, welcome everyone. Good evening. Thanks everyone for joining. Happy New Year's. We're going to get started in a couple minutes. I hope everyone's doing well and get ready to get back into it. We're going to have a big year, guys. So lots of learning this year. We're going to get into lots of education and live trading with you guys. And hope everyone's doing good. And just give me a couple minutes just to get set up here and we're going to get going.
Hey guys, good morning. Welcome to the live session of Stocks Number Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey everyone, welcome to Stocks Numbers Trading. Thanks everyone for joining. Happy New Year to everyone. I wish everyone a happy, healthy, and wealthy 2026. We got a lot planned for all of us at SST. We have lots of education this year. I'm going to get into it, what we're going to do, lots of live trading, lots of learning and earning. And I wish the best for everybody. Okay, guys. So make sure that hopefully you guys learned a lot from the previous year, 2025. Put that in review, a big yearly review. You know, when you're looking at your journal day in, day out, week over week, you also have to reflect back at the previous year and see how far along you've came as a trader. And make sure you set some goals for the upcoming year. And set some realistic goals that are achievable so that we can hit those goals. Okay. And here at SST, we're along the journey with you guys, and we're going to do our best to help you guys. Okay. So thanks everyone for joining. Just let me know that the audio is okay. The cameras are working. Everything is all good. I haven't streamed it's been like maybe 2 weeks now. So I just want to make sure everything is good. This is our first one. That we're starting, and we're starting off with Tokyo this week, and then we're going to get slowly into the markets. And there's a lot going on around the world right now, guys. Like when you turn on the news, there's a lot going on. So it's going to be a pretty busy year. If we've already started, it's not even the first week of January, and we've already had some serious news that's affected gold and oil right now as we're speaking. So I'm sure some of you guys are on top of on the news. And just guys, let's all trade with proper risk management this year. Let's keep learning and earning together, and let's do this as a team effort. Okay. And so first thing is, guys, you guys probably traded yesterday. You know, I had to take a day off, unfortunately, but I'm back with you guys today. So hopefully you guys did all of your forecasts. You guys have looked over Forex Factory. You know, we're just because it's a new year, we still got to get back to the routine. We got to look at what is the upcoming high impact news this week. Is it the first Friday of the month? Do we have an NFP? What are the earnings? Also, don't forget the earnings. You got your uncle here to always remind you. We got to go through the earnings. Do we have any big names in the pre-markets, in the after hours that can affect anything? So we got to take a look at those big names in the earnings. And then we'll go through our top-down analysis. You guys know the importance of doing a top-down. It's because we got to look on the higher time frames and then take that bird's eye perspective and start looking down and bring it down to a time frame that you are comfortable trading. Not everyone here likes to trade the 1 minute, 5 minute candles. Not everyone here aspires to be a scalper. No disrespect. You're not disrespecting me if you don't like the 1 and 5 minute candles, but we will find a time frame that you prefer and you're comfortable with. Whether it's a 30-minute candle, whether it's a 1 hour, if you prefer the 4 hour and you're a swing trader, it's all love. It's all good. We'll find out your time frame for you, but we got to figure out your what's comfortable for you and your lifestyle and your schedule and things like that. So that's when you're starting to learn how to become a mature trader, how to balance your life with trading. It's not easy, but it can be easy if you go about it with a solid plan. Okay. And that's what we're here to help with. Okay. Remember, trading is a balancing act. All of us have families, all of us work, all of us go to school, all of us have busy lives, right? That we can't dedicate the entire day to the charts. So you got to learn balance. Once you learn balance, then your trading is going to go to the next level. And I promise you that when you can understand what I'm saying, when you can balance your trading with your life, everything gets better. Okay. So that's what we're going to do. We're going to show in 2026 how to balance trading with life, okay? And we're gonna be here with you guys every single day on YouTube and on Zoom, okay? So first things first, Donald Trump is in the news. You know, if you've been away from the news, let me just remind you, there's been some news in Venezuela that just happened just recently. It's breaking news. So you can see how the oil sector is moving. Your Unc Ronnie over here bought some calls on Chevron, ExxonMobil, and Texaco. Why did I do that? Because those are the big oil names in the United States. They have a Chevron that is located in Venezuela, and you gotta think about it just with a normal approach. Is it going to go up or down? Obviously, it's probably going to go up with the news. So again, trading, you should be trading news. You know, you got to know what's going on around the markets and how it affects different parts of the world. Okay, and that's in the news. And he's also talking about Greenland right now. So like he's talking about moving into Greenland for strategic military. So, this is developing news as well. So this can affect the markets on a daily basis, guys. I told you, 2026, it started off pretty hot, and it's going to be a busy year, okay? And on top of all of this stuff we got going on, we got news to worry about. So right now in another hour, you have some Australian high impact news. You got their CPI year over year, month over month. So we got inflation coming out in Australia. If you guys are trading the Aussie dollar over here, pay attention to that. That's high impact news, okay? We don't have to worry too much about this because we'll be looking at gold at that time. But if you're trading the Australian dollar, it's going to get high impact there. Tomorrow, you got some news, okay, coming out of Europe, and then we move into North America. So we have our JOLTS job openings. So this is our job openings. So we're going to see, and you can see the forecast is a little lower than the previous, 7.6767. You can tell I have kids about this 6.7, and you can see here the forecast is a little lower than the 6.7 down to 6.1. So that's job openings and labor turnover leading into our NFP for the first Friday of the month. Okay. We also have ISM services. All of this news is coming out at 10 a.m. So you guys know the drill. 8:15, there's a U.S. high impact ADP non-farm employment change. Then at 8:20, COMEX market. So Yank is just reminding you about the commodities market. That's gold, that's silver, copper exchange, opening up to the metals. And then we have some news right 30 minutes right after Wall Street market opens. And a lot of traders now are looking at the oil charts. Whether you're looking for swing positions or you're looking to scalp it, it is volatile, as you guys can imagine, just like gold. Crude oil is very volatile, and we have our first crude oil inventories for the week. Remember, these are week over week. So if you're going to add now oil into your charts, make sure now you pay attention also to the oil inventories. This is week over week, and it's scheduled to come out every single Wednesday at 10:30 a.m. Eastern, okay? I'm going to be adding oil on my charts as well because there's lots going on in the world regarding oil, okay? And there might be some good opportunities to look for some swing trades to hold for maybe weeks or months. You can do that in the futures. You can also do it through Forex, whatever floats your boat and whatever you guys are comfortable with, okay? So that's the news, and that's midweek Wednesday. Then we move into Thursday. There's a little bit of European news. We move into our regular scheduled programming. So you guys remember late in the year, October, November, U.S. government shut down. So that affected a lot of our folders. But now the U.S. government is operating. They're open. So we're going to go back to our regular scheduled program here. So you guys know every single Thursday morning at 8:30, we have our U.S. weekly unemployment claims. So we don't want to see, wherever you live, you don't want to see unemployment going up because that's not a good sign. That means lots of individuals are out of work, seeking work, applying for unemployment benefits, and it's not good for your local economy, okay? So these are week over week. So if you guys remember the last week we had of the unemployment claims, it came out 199,000 individuals unemployed. And you can see this week, they're forecasting an additional 14,000. So that number is 213,000. We'll see what the actual number is this Thursday morning, okay? If this number is higher, then it will dramatically impact the US dollar in a negative way, okay? If this number is lower and there's less individuals seeking unemployment, then that's good for the US dollar. That's good. That means that US citizens are working. They're not unemployed. They're making money. They're contributing to the economy. That's good for the US dollar, okay? And that will be this Thursday. And then finally, to finish off the week, guys, it's the big one here. So you got a lot going on over here with the non-farm payroll. So, regular scheduled programming. This is the first trading week of the year. We are still technically just finishing off the Santa Claus rally right here this week. And what better way to finish it off with U.S. Non-farm payroll. So this is first Friday of every single month, unless there's a federal holiday, okay? And there is news in Europe. It's all low impact folders. If you are trading in Europe, just be careful. Remember, it's the end of the week. It is a Friday, so make sure you have a plan going into it. 8:30, lots of Canadian news regarding our unemployment. I'm Canadian. I live here in Canada. And look at our unemployment increasing here in Canada from 6.5 to 6.7%. So I'm going to start seeing a lot of individuals here in my hometown unemployed. So Unc Ronnie needs to teach these guys how to trade. So hopefully they can hit Dave and I up and we can teach them how to trade. We started Stock Sniper trading, guys. We were trading years and years and years ago, but when we got together and started YouTube was June of 2020. So it was a couple months right after COVID and the pandemic when a lot of our buddies were laid off, unemployed, locked down, and said, Ron, can you guys, and Dave, can you guys teach us how to trade? And we said, no worries, come on over. We can get together here and we can teach. But then we started, why don't we teach the world? Why don't we get on YouTube and try this? I was very, very nervous. I'm not a streamer. I'm a trader. So it was a big learning curve for me as well. It's not easy to get in front of an audience and do this day in and day out, but I love it. So I'm very passionate about teaching. So I hope you guys are constantly learning with us, with myself and Dave and all of the snipers in Discord, and just continue learning, guys. Remember, be humble, be a student to the game. Every single day we're learning. Look at what's happening right now in Venezuela, United States, how it's affecting the markets. If we're not constantly learning, we're left behind. So don't have an ego about trading. Believe me, I had an ego when I first started trading. I got humbled real quick. I lost a lot of money. I thought I was big and bad in these markets, and the markets, they knocked me right out. So I had to get back on my feet and get back and learn the proper way of trading. Okay, guys? So make sure you guys have goals. Make sure you guys are learning risk management. Most important thing, before we even look at a chart, make sure you guys understand risk management. Understand that trading is a lifelong process. So slow and steady wins the race here. It's all about compound mathematics. If you can earn 0.51% on a daily basis, you're good. You're going to live a comfortable life for a long time. So you don't always got to hit grand slams. You don't got to go for a 20% day. You don't got to go and double your account in 1 hour. You got to just stay steady. Do a realistic approach about trading and you will see. Once you start hitting those goals, you can slowly start to increase. You can increase your position size. You can increase your leverage. You can also increase your daily goals. That's how you go about trading, guys. That's my honest opinion. If you want to do this for years to come, and I know you guys are going to do it. So all of the get rich quick, you guys know it's all bullshit. There's no get rich quick in trading. A lot of us have tried it and we never got rich quick. It took years and years and years of learning. And I know that you guys are down for it because you guys are with us every single day. So we'll be here to guide you guys. But I need you guys to be responsible and mature traders and risk accordingly to your accounts. Remember, we all have different account sizing, but we can all aim for certain percentages together as a team, okay? So with non-farm payroll, we have our average hourly earnings. It looks like month over month, it looks like an increase over here in the forecast from 0.1 to 0.3. We're seeing a non-farm employment change. So they've set the bar pretty low, 64,000 from the previous NFP. That's not a lot of jobs, like in the entire United States in one whole month of non-farm payroll government jobs is 64,000. So the bar is set pretty low, and the forecast, it's not much bigger. It's 66,000 over here. So we'll see. Maybe this will come in 70, 80, 90, 100,000. That means that they beat the forecast. They beat the previous month. Obviously, that's going to be good for the US dollar. They're creating jobs. That's great. However, if this number comes in below 66, below here, it's going to be a red number, and that's not very good. Then they're not creating a lot of jobs. So remember, this is all from the previous month. In December, okay? So you got to reflect back. You got to look back in December. Was anything going on? Was the government on strike still? All of these things, and put the pieces of the puzzle together, and hopefully this will help you out when they release this. And look at, there's multiple red folders. That means high impact. So if you go about this, there's a lot of full port traders. They go all in on FOMCs, NFPs, CPI events. If you do that, you'll learn, and maybe you'll get lucky. But some days that candle goes opposite against you, and with this high impact volatility, you could do a lot of serious damage to your account. And so I wouldn't suggest that. Go lower risk when there's high impact news. If you're going to stay on the sidelines, stay on the sidelines, give yourself rules, maybe let them release the news. Watch the candles, look for some big body candles, see if you can cut some in half. Is there a trend? Is it choppy? Is it consolidating? All of these things. That's your job as a trader, okay? So there's a lot of good trading that can happen after the news is released. You don't got to trade 10 seconds right into the news, unless you know something, unless you're following your analysis and you're using proper risk management. Maybe you're walking right into a nice trade and it goes directly right into your profit. So that happens, but just trade with caution. That's all I'm saying here, okay? And that will be, and then right after Wall Street opens on a Friday, remember, this is the first week of the market open in the new year. So take it easy, okay? We don't want to see blowing accounts in the first week of the new year. It's demoralizing. So we want to start the week off fresh. We want to start off positive. So just trade accordingly. We're going to have multiple weeks to trade, but this is just the first week after the holidays in the market. So take it easy. Take it easy. A lot of us have still drank a lot of eggnog and we haven't recovered yet. So let's all take it easy here. And then you see 10 a.m. also has 2 high impact red folders. We got some prelim University of Michigan consumer sentiment reports and inflation expectations. And that will wrap up our week news-wise this week. And that's not to go with all of the other news regarding like USA, Donald Trump, and everything that's going on with oil around the world. Okay, we have in Iran, there's significant news going on around all over the map, all over the globe. I'm sure wherever you guys are, there's something going on. I'm here in Canada, and you see the high unemployment going on in Canada. This affects us here in Canada, our oil fields in Alberta. That's why the Canadian oil securities were down red, and while American oil securities are green and they're up. So, you know, you got to kind of follow what's going on and how it affects your country. The Canadian dollar, the loonie, 30% of it is backed by Canadian oil. So think about that. If oil struggles here in Canada, the loonie is going to depreciate in value. So if you're trading USD CAD, if you're trading Euro CAD, if you're trading any currency paired against the Canadian dollar, you should be following what oil is doing as well. So I'm not any longer a currency trader. I used to be when I first started. I've moved on, but for some of you guys, currency trading is great to get started. It's very technical. It's not as volatile as trading gold, oil, NASDAQ, Dow Jones, and those type of securities. Okay, so if you're a beginner, stick with Forex and continue to learn and move your way up to the bigger securities as you get more experience. Okay. And that's going to wrap up our week on news, earnings. We got lots of news. So tomorrow morning, again, I'm just going to go through this real quick, look for some big names. I don't see anything tomorrow in the pre-market. The Wednesday after hours, we got Constellation Brands. I'll be watching this because Constellation Brands took a big stake in the cannabis sector a while back, and I'm watching the cannabis sector right now in the United States as well. So we'll do that more on swing trading and higher time frame when we go to the stock and options program, when we start learning about that. I'll start introducing you guys to different securities maybe you guys have never heard of, but they're good to put on your watch list and just watch as reclassification happens in the United States. If they pass bills, pass going through the House to the Senate and things like that, we could literally watch maybe United States maybe federally legalize cannabis, and we can watch the weed securities. We did this in Canada back in 2014, all the way up to legalization, and I'm pretty confident and familiar with this sector over here. So I'll help you guys out with that. And we can smoke weed and make some money too at the same time. So that's a positive for me. I like to make money and I like to smoke weed. So what better way by looking at the charts of Canopy Growth Corporation, CGC in the United States, is the big ticker name, and we'll talk all about it. So that's what's going on Wednesday. Thursday pre-market. We got a few securities here. Commercial metals company, CMC. So we got a lot going on in the metals right now with copper, silver, and gold. So maybe one of these metal companies is worthwhile looking at their earnings or listening to on forward guidance. Okay, that's another clue that you can get from a lot of these securities. You don't have to trade them, but you can listen in on the conference call. You can listen to when the CEO is speaking to the shareholders of the company. They have a Q&A session. They tell you about the forward guidance. Maybe they're looking positive in the metal sector. Maybe they're going to give you some clues, and that's how you could be trading for the next quarter to come. Okay, so that's what we got going on Thursday pre-market, Thursday after hours. Tilray, this is a cannabis security here. Tilray, if you guys remember this, this thing was wild back in the day. It was trading at $17 and it shot up to $300. It was wow. It was one of the biggest short squeezes I've seen in the cannabis sector my entire lifetime. So I've got this on my watch list as well. This is Tilray Incorporated, TLRY is the ticker, and you can see that they are reporting this week. So we got some cannabis securities reporting. Friday, nothing going on before the open, and Friday after hours, pretty quiet. Okay, so that's earnings this week. No big names like Amazon, Nvidia, Apple, Bank of America. We'll be going through that very soon in the next few weeks, but right now we don't have anything going on this week. News-wise, lots going on with Nvidia. Over here, Nvidia's in the news. Dow and S&P 500 hit highs in record-setting start of the year. So maybe Santa Claus is still here. We're still in the Santa Claus rally. How long will it continue? I don't know. Is there going to be healthy pullbacks? Possibly. Are we going to get some news that's maybe going to sell off the market? We got to stay glued to the charts and to the news, okay? Because everything is developing by the minute, okay? So we got to stay updated with news as well. Okay, so there's lots of news going on in Venezuela regarding oil. Venezuela's new leader is the oil industry's long-term ally. There's articles here. You can see a lot has to do with Venezuela here and oil. So it says it has the world's largest oil reserves. So that's pretty big. That's pretty significant. That's why it's developing news in the oil securities. Is crypto making a comeback? Bitcoin kind of is consolidating in between 90 and 95,000 right now. Again, what is that psychological number? 100,000. Is it going to get there? Is it going to stay below? Will it close above? Where's this consolidation? It's nice if we can stay consolidating in between 85 and 100,000. Let the markets accumulate, and maybe we'll see our next run to the all-time high of 126. However, there could be one more healthy pullback to come into. Remember, revisit the $50,000-$60,000 area and see if the big institutions want to start to buy in there and start to accumulate. However, could leave them behind and just continue moving. There was some news that came out of MSCI. It's an index that was looking to maybe take out Bitcoin securities or crypto securities out of it. And just in the after hours today, they said, nope, they're going to keep them in. So that was very positive. If you guys saw around 5 p.m. today, Bitcoin made a big push. That was regarding that news. So if you didn't catch that, it's my job to help inform you guys, okay? That is what's in the news. Also, Trump is talking about Greenland right now. So that's big. Greenland is part of Denmark, part of Europe. So this is something different now, like what we had with Venezuela. That's Latin America and the Western Hemisphere. But Greenland, just looking at history, is property of Denmark, and Denmark is in NATO, and so we will see how this all develops. Dave and I in SSD, we're in the middle of this. We're in Canada, and we're just stuck in the middle. We're your friendly neighbors. Leave us out of this, and and just keep us safe over here. We don't want to get involved. We don't want none of this. We're staying neutral. We're peacekeepers here, okay? We want to continue just educating and watching what's going on. But this is happening, so we got to be informed, guys. It's in our backyard. And guys, Discord signals, SST signals. If you're looking for some trade ideas, trade alert signals, we do provide these. This was earlier today. Here was NASDAQ. So you can see we're looking for buys above right over here, 25,465. You see you get a closing balance, you get some volume above. If you patiently wait, if you miss the first move, that's okay. That's what we want to try and teach in trading, is patiently wait for the corrective pullback. You get it in there, and then there's again the corrective volume closing above. You get again another nice candle right in there. You could have bought again or had a pending alert at the corrective phase, and then look at how it took off. And that could have basically been maybe your one trade, two trades that you need a day, maybe hit your daily goal with that. And that's all it takes, guys, is just looking for one good quality setup with managed risk, and you can literally hit your daily goal every single day, okay? And we're going to work hard on drilling this into everyone's head so that we can do this on a daily basis. And there's also lots of signals sent out on gold. Gold is a very active security, so you're going to get more signals on gold and index as opposed to like crypto and things like that. So looking for buys above 4,450, this nice psychological range. Again, there's the closing volume. There's a little bit of a pullback. And then you look at the bottom. Is it creating depth of market? Is it creating higher lows? Is it creating some structure? I can see this big bullish candle. If I cut it in half and did a point of control across, I'm sure I still see volume holding above it. And then I get another closing body and then another retest candle, short wick. You guys know the drill. So I want to go back and teach you guys the language of trading, the way how I talk. So you guys know in a live situation what I'm talking about. If you hear me say ignited, if you hear me say short wick pop, you know, pip and dip, you got to know the language, how we trade. Because when you know what we're saying, because the markets are moving very fast on the 1 minute, 5 minute candles, and I talk very, very fast, I need you guys to understand what I'm saying. And then you guys can, you know, like watch live and learn live with me. Okay. So, that was a beautiful trade. Had you let it run, it can continue to move. We teach about leaving runners. I target areas like zone to zone, tape to tape. Once I get my move that I'm looking for, I do partials. I close out 80% of the bulk of my trade and I leave 20% running while managing risk and ultimately getting my stop loss to break even. And that helps control emotions and things like that when we're trading. Okay. If you need signals, trade ideas, we do provide those, and you can use them as confluence when you're trading as well. Okay, guys? And thanks everyone for coming back on YouTube. We do appreciate you guys. I know it's been like 2 weeks off, but we're back. There's a free Telegram channel pinned at the top of YouTube for you guys right now. I highly recommend everybody that's not subscribed to this free Telegram gets in right now, because these will be all of our live links going forward on YouTube, our free blogs that we put out here, trade recaps of Dave in the New York sessions, our SST signal recaps, and just any relevant information. Lots of free education here. Did you guys see this? This is one of the hardest album covers of 2026. Maduro in that Nike Tech tracksuit. That was a badass photo of him. So we kind of made that into a cover of an album right now. That is, I'm saying, going to be 2026 album cover of the year. But it's still early. We're in the first week. Who knows what else we're going to see this year. And then here's a good article here if you want to learn a good blog about the oil, the top 10 countries by oil reserves in the world. That's good to know, guys. You know, the more knowledge we have, the more we can learn about the markets, okay? And make sure you guys read this trading checklist for any trader. This is a good checklist to help you guys get ready for the new year. So make sure you guys go through this. I'll go through this with you guys tomorrow because I have another blog for us today that I want to go through. So this is a free Telegram channel. It's available to all of you guys. And don't fall for the scams, please, guys. Dave and I would never, ever message you guys to offer you guys, if you give us $1,000, we'll make it into $1 million overnight. When you hear those stories, just call them out, say it's full of shit. Ron and Dave don't do that. They're live traders. They educate. They're on YouTube every single day. They wouldn't do that. So don't, please, guys. We've had some people in our group, unfortunately, fall into that and lose some money. So we don't want to do that, guys. we would never message you guys, okay? So if you're getting those type of messages, just, delete them, block them, okay? This is our website, guys, stocksnipertrading.com. Join us. We have lots of education. I'll talk about on another day. I'm going to start a trading academy, and I'll let you guys know all about that. It's going to be like a 3-month academy every single day for about 2-3 hours, like we're in school. It's my first time doing this, so I'm going to learn with you guys as well. And I want to continue to do this for multiple years to come. So it's going to be something new we're doing this year. And we'll have that. I'll release the details very, very soon with you guys. Okay. And all of our live sessions are on the calendar. You can see Dave does a lot of New York's. This Friday, we're uploading a webinar on the website, and we got our Tokyos this week. Okay. And our free blogs are available on the website. If you go to more, click on all the blogs. They're all over here. We've got weekly outlooks. There's that blog I was talking about oil, about the top 10 oil reserves. You can see number 1 is Venezuela. They are in the news. It's facts right now, what's happening, so why are they there? I don't know. They're saying for the drugs going into the US. There is maybe 1% drugs going into the US, but there's also the world's largest oil reserve. And I'm not a betting man, but if I was to bet, I pretty much understand why US has why they're going in there. I was alive and very young when I was trading, when I watched what was happening in Iraq. I was trading. I was watching what happened in Libya. I was trading at that time. I was watching what was trading. We were live, guys, in February 24th, 2022. I have the live session where the first missile went from Russia to the Ukraine and how it affected gold and the oil markets at that time. I was trading through the pandemic. All of these things. So this is common, guys. It happens, Unfortunately, things like this happen. That's how the worlds operate. If you go against the US dollar, there's going to be repercussions. So I can go into all of that later on to talk about Saddam Hussein, to talk about Gaddafi, to talk about all of these guys. They went against the US dollar and look what happened to them. So I just follow what's going on in the markets. I follow the money. When you follow the money, that's how you can make some money in your pockets as well. So the money is moving. We got to follow it. That's our job as traders. I've been following it for half of my life, and I'm not going to stop following it until the day that I die. Okay. So I'm very passionate about this. I hope you guys are as well. And I hope you guys can continue to learn and learn and learn because that's going to make you that much better of a trader, okay? Before we get to the charts, and believe me, I'm going to get there because I know it's 7 p.m. We got to get ready for the futures, but I have to go over this with you guys because I want everyone to be focused, okay? And believe me, guys, if gold is moving right now, just pay attention to this blog for 5 minutes. Just give me 5 minutes because this is really important, guys. This can maybe get you set up for having the right mindset going into this year's trading, okay? So for 2026, some trading goals for all of us here at Stock Sniper Trading, okay? So this is for all of us, everyone on YouTube, everyone on Zoom, myself, and Dave. So we got together and we were thinking, what can we do? What are some goals for us as a community together? Number 1, we do live trading sessions, okay? With myself and Dave, we do a lot of live sessions. So what do we get out of these live sessions? I hope, okay, this is what I hope for you guys get out of this. An objective is why do I do live trading and live education? I personally believe that when you're learning alongside someone in a live environment, whether you're an electrician and you're teaching me, I want to be job shadowing you. I know it's important to read the books, but also when I'm actually watching you do your job, I can probably retain more, ask you questions, and learn faster, okay? So why would we not use the same type of education when we're trading? So you guys can follow alongside myself and Dave as we navigate these live markets. We can enhance real-time decision-making and market analysis skills. So I think we've proven from 2020 to almost 6 years now that we do this live with you guys every single day. We're pretty transparent because we can't hide live trading when we're buying and selling. We do take losses, we do take wins, we have break evens, but we give you the psychology behind us taking the setup, taking the trade, so you guys get to understand why we're maybe looking to buy, why we're looking to sell, why we're waiting, things like that. Okay, so that is better in a live environment, and you guys can ask questions live while it's happening, okay? So some goals to get out of this. We want to achieve at least a 70% success rate on these live trading calls. We had someone go back and kind of analyze the live trading here at SST, and we are above 70%, okay? But we use proper risk management also when we're trading, okay? So that's our goal. Are we going to achieve 70% this year? I don't know. Maybe markets are very, very volatile. We take some, maybe it's not, but we want to achieve 70%. So I hope that you guys are setting realistic percentages. We're not going to be 100%. I can tell you that right now, that I'm not claiming that we're going to be 100%. No trader is 100%, okay? So you can be 60%, you can be 70, you can be 80, you can be 90%. If you're trading with proper risk management, you're consistently making money every single day, okay? What I want from you guys is to increase participation in sessions by at least 30%, okay? I want a third of you guys to increase your participation. Ask questions, relevant to what we're doing. That's how you learn. I'm not going to catch every single question because there's a lot of you guys, but there might be a question that I see, I answer, and it might be a question that maybe a lot of you guys have had or wanting to know. And then we can help each other that way, okay? And remember, my kind of philosophy is there's no dumb question, okay? There's no dumb question. We all know that today could be someone's first day of trading. And I remember my first day of trading. It was intimidating. I was scared, and I was scared maybe if I was in a group, maybe I asked a stupid question and they would make fun of me or whatever it is. No one is here to make fun of you here, okay? We're all a little older. We're more mature here. So all questions are good. The only thing that I don't like is spamming. Just guys, try please not to spam. That's because it takes from the flow of the session. And then when you're spamming, I'm not seeing people asking real questions because someone is spamming just buy gold 10 times. And it's just, let's keep the spamming down a little lower, okay? But I encourage you guys to ask questions, okay? So we want to get that. I want to make these calls a little bit more interactive, so we're going to do all sessions, New York, Tokyo, I'll get back into some Londons. Some sessions are just going to be live education, straight education. That's when we're going to go to the books, and it's not going to be live trading, it's live education. And I really want to teach you guys this skill so you guys can learn this and do this the rest of your life. Okay. So we're going to incorporate advanced trading strategies. You guys know that. I'll show you guys, we're going to do a top-down analysis. We're going to learn pattern recognition. Why do we want to do this? Because we want to improve our trading outcomes. Okay. So that's why we do these things. Is every day you want to improve outcomes of your trading. How do you do it? By doing the same routine, repetitive stuff over and over and over. And then you're going to become so good at it that you'll be able to do it while you're having a conversation with your friend in the other room, and you're still looking at the charts and you know exactly what's going on. So that's where we're going to get you guys. But I'm not going to say it's going to happen overnight. It takes years and years and years of practice. It takes years and years and years of experience. It takes years and years of taking losses and learning from your losses. So that will help you develop as a trader. Okay. So remember, losses are okay. We all take losses, but manage your losses, okay? When you can manage, yes, you might take a loss. It might be a little one. Maybe you recover it on your next trade and then you learn from it and you keep moving forward. When you go 100% high leverage and you risk your whole account on one trade, something goes wrong, you've lost your entire account. So number 2, signal and trade ideas. We do offer these. We do these to help you guys out. So the objective of these is to provide reliable and actionable trade signals to our community. So I show you through our Discord, and that's why if you join that free Telegram, you can see the before and afters of the trade signals and alerts and get more familiar with how they work. Goals of these, we want to maintain a target accuracy rate of 75% or higher for trade signals. So you can see that, yes, sometimes they do go and hit a stop loss. That's part of trading, but you got to also look at the positive trades and the winning trades that they're pretty good over time, and they've been over time above 70%. So good above 70% live trading with signals, with proper risk management, we can do a good job together, okay? So we want to continue this. We want to expand signal coverage to include emerging markets and sectors like right now, renewable energy and tech advancements. Tech is in the news every single day. So we got to start maybe to expand our coverage. That's why we're going to start to move a little bit into the stock and options program this year, okay? And that's going to start very, very soon as well. And also renewable energy. Right now, there's lots of news going on with crude oil. But what about renewable energy? Canada over here can produce cheap oil, and not that thick stuff. It's actually very good oil over here, and it's cleaner. So maybe in the future, 10 years, 20 years, 30 years down the road, Canada might be the world's provider for clean oil and renewable energy over here. So yes, they might take a little bit of a hit right now, but I'm sure that they're moving into the future and they're thinking of new technology and how to make cleaner energy, which is going to be needed in the future, okay? So we also want to do this through the stock and option program that I just mentioned earlier. We want to develop a robust feedback loop to refine signal quality, incorporating community insights and market evaluation. Finally, education, guys. Okay, so I'm a big proponent of teaching. Okay, so I learned the hard way of trading. I learned all on my own how to do this, and I know you guys can do this as well. But we got to learn together. So we want to empower you guys with knowledge and skills to enhance your trading proficiency. How? What are the goals of this? We're going to launch an updated curriculum focused on advanced technical analysis, risk management. We just finished that boot camp on risk management, and we're doing the psychology webinars that are released every Friday, the pre-recorded ones for your emotional discipline, because trading is not about just candlesticks and risk management. You also got to be very emotionally disciplined, how to control yourself when you lose a trade, how to be disciplined where you don't get greedy. And that's what a lot of traders also need to learn. So we'll help you with that. We're going to host weekly and monthly webinars and workshops featuring snipers to discuss new trends and strategies. So I want to kind of make the Zoom calls more open mic, where you guys can now unmute your mic, ask me a question. I'd love to have a conversation with you guys. We can kind of have everyone listen in on the conversation, and maybe they can learn through you and I. So I want to do more of that, but I'm going to need you guys to not be shy and just come in, unmute your mic, and just talk with me. Just pretend there's nobody else on the call, and it's just you and I, and we can have a conversation together. I'll do my best to help you as a trader yourself, and hopefully everyone else can listen in on our conversation and learn from the both of us, okay? So I'm very excited about that and making it more interactive this year, because I want to include you guys. You know, that's why we do this. Not everyone here wants to listen to me all day. So and same with myself. I don't want to listen to myself all day. I want to hear you guys. So that would be amazing, guys. I want to start off with you guys on Zoom first. And if you guys want to either let me know as we go along who's down for that, and we freestyle it. We say, hey, how you doing? And we just go into it. I ask you a question and we just go into it. There's no, it's not set up. It's just whatever happens, happens. You might come on there and say, Ron, you're an asshole, and just cuss me out. That's cool. You know, if we do that, that's fine. You know, just get it all out. It's all good. So I just want you guys to be yourself and just have fun with this, okay? And I promise you, more and more traders will learn and be more engaged when we do that, because we'll learn more about that. Because if you have something that you're going through as a trader and we can help, I'm sure maybe someone else is going through that, has gone through that, can relate to that, and maybe we all learn together, okay? And then finally, guys, lots of education. Then we have our Sniper Discord trading community. So this is this community right over here. I'll just move the news right now and then just show you guys just the commodity section right now. So this is what's going on with the snipers right now. You know, Forex Borex is in here like religiously every single day. Shout outs to Forex Borex. He's the pip god over here with his chart analysis and helping out the snipers. We got Newt over here, and everyone. Justin is in here sharing charts, guys. Tyler, you know, throughout the day, talking, trading as a community together, looking for buys, looking for sells, sharing perspective. This is what a trading community is all about. It's about trading together. We win together, we will lose together, we'll break even, but we're breaking bread together every single night. So that's the most important thing, and I guarantee you will learn in here. So it doesn't always have to be myself or Dave. There's all of the other experienced snipers in here helping out the team, okay? And then, so we got the Discord community. What is the point of this? It's to foster a supportive and dynamic trading environment. The goals of this is to grow the community by 50% this year, targeting both seasoned traders, experienced traders, and we welcome beginners, we welcome newbies. So we don't care if it's your first day trading or you've been in the markets for 50 years. Join us. Come on in. You're more than welcome to share your insights, and we all learn and earn together. We're a very open community. Come and join us. Because I guarantee you'll take your trading to the next level. So we also encourage collaboration by introducing themed discussion channels, such as sector-specific talks. So we got commodity, we have index, crypto, Forex, and strategy brainstorming all day. That's all we do here, is looking to solve these markets, look for the patterns and recognize them and play this video game to make some money. So we're going to also do this year, through you guys, we're going to implement like a leaderboard and a reward system to motivate active participation and recognize top contributors in the Discord. And we want to give back to you guys by rewarding you guys. We'll figure out how, but we want to say thank you to those that are doing a lot in the community, okay? And finally, guys, just stay motivated. This is going to be a big year. I hope you guys are as motivated as me. We want to cultivate a thriving community where members support each other's growth and celebrate successes collectively. So we've watched a lot of our snipers in our group from the first day they've came here, and now they're mastering the markets and they've changed their lives. I'm not saying anything about me. I'm saying with the snipers in the group. They are a testimony of what's going on at SST, and everyone knows how everyone's doing. So shout outs to all of you guys that have really changed your lives. If I can share you guys just a little bit of the messages that Dave and I received over the holidays, it was beautiful, guys. So thank you. You know, we know that we're changing lives, and it's very humbling. So let's continue doing this, okay? One trader at a time. And so some keys to success is we want to emphasize a cultural and continuous learning and adaptability to navigate these volatile changing markets. Look what's going on right now. So, you know, if this was my first day learning how to trade, and we've got all this news going on with Venezuela, and I'm trading gold and oil, it could be kind of chaotic and hectic. So join a community. It doesn't have to be our community. It can be any trading community, but get involved with other traders and learn from each other, okay? And celebrate wins, big or small, doesn't matter. Like this is a big win rate over here for Newt with a 0.05. It's $2.10. I don't look at the dollars. And here's another one of, you know, $200. I look at pips, percentages, ticks, things like that. You can always, when you learn how to do this, you can bump up that size to a 0.1 and you'll make a little bit more money. So remember, the name of the game is capital. You gotta have capital too, but that's a way how you can compound to get to that capital. But when you're learning, use the smallest sizing possible while you're learning. In my opinion, this $2 later on can turn into 200, later on maybe to 2,000. Hopefully for some of you guys, it turns to 20,000 and 200,000 down the road, okay? And I know you guys can do it, but take your baby steps and move up slowly. So celebrate everything, even your losses, guys. I know no one wants to hear this. Why should we celebrate our losses? That's kind of sounds silly. Why would someone say that? Obviously, we don't want to celebrate, like get excited about losing, but we have to acknowledge that a loss can be a learning experience. You learn from it and you move on, and then you can celebrate later on because you won't be making those mistakes again in the future. So, you know, you got to celebrate everything. You got to be humble in these markets. I know it sucks losing. Believe me, I trade like you guys. I lose on a daily basis myself. I get pissed off, but I got to learn from it. If I don't learn from it, I'm probably going to lose again the next day and commit the same mistake. So once I learn from it, I can move on. I'm happy, you know, and then I can understand that I can overcome that again in the future if it ever presents itself, okay? Finally, share some inspiring stories and testimonials from you guys within the community to motivate others. So all of your successes, everything that you guys write to us, it means a lot to Dave and I, believe me. This is why we do this. So it is nice to see a lot of positive stuff come out of here. So continue, guys, just being you, and the rest will fall in place. So by focusing on these areas, SST aims to elevate its impact, providing value through comprehensive education, precise trading signals, and a thriving community here. So let's get these pips this year. Let's work as a team. If you want to join the team, here's the link right over here, guys. And finally, guys, if you get value out of this, and I honestly mean, if you're getting value out of the channel, don't just hit the likes or subscribe because we ask you to. Actually hit the like button, subscribe to the channel, because I can pretty much guarantee you it's going to be very valuable. It doesn't cost you anything, and you might learn on every single call, okay? And we're gonna grow this to 100,000, whether it takes us 1 year, 10 years, or 100 years. We're gonna get to 100,000 very, very soon, because we're gonna grind with you guys every single day. So thank you guys for everything. Now, this is what you guys are all here for. So it's 7:20. We got a lot of time to do a top-down analysis. I know some of you guys took some shorts at 4,500. Look at guys, remember what we always talk about: psychological numbers in the market, efficiency, auction theory, all of these things we talk about. What price did it just hit right now? Like, what was that highest point right there? Look at 4,500 exactly, okay? You guys know me from, I've been saying, I don't make this stuff up, right? When it comes to these levels, you have to be ready because markets are like a magnet. They're attracted to these psychological areas. And this is why I want to get into that trading academy and really break down why, like right now, we could make a 2-hour call right now on psychological levels. And we can talk all about psychological numbers, and I can break it down for you guys why these are important, right? Right now I can't because we got to get right into the markets, but I'd like to dedicate an entire call on talking about auction theory, psychological numbers, how to identify these blocks in the market, and why they are important. When you understand that, then tomorrow when you're trading, you're going to be thinking about this, what Ron just talked about, and you will see when price comes to these levels, you'll see a reaction there. And you're going to be like, oh my God, I remember Ron talking about this psychological number. And when it comes there, it does something. Does it always do this? No, but it's always good to get ready in case it does. And then you see, then what happens there? You see a big bearish engulfing candle. Had you cut that candle in half, right? If you go through now, you know, when you cut it in half, you find the point of control. What have we been focusing on all last year is this philosophy. And when it came in there, you see sellers lower high, come in there, and there it is. That would have been a perfect 3-bar selling pattern. You sell and you place your stop loss above this previous high. That's a pretty standard stop loss. It's pretty tight. Some traders trade with a much larger stop loss, but you can see how if you took that setup, you're in the money and you haven't realized pretty much any drawdown. You could reduce your risk by going to a break even, and now you could be securing some cash and leaving runners, right? And now it's pushing down. So that all developed right now at 6:30, right when we started the call, right at 4,500, okay? Will it come back up there? Maybe it will. Did you mark off that the first high when it came up there, it got rejected? Did you stretch that zone into the future in case it does come back up there? I recognize this pattern. Same with you guys. We know it moved up there one time and then it's right here. What if it comes all the way back up there? That's considered that double top. And maybe it gets rejected and we push down from there. It's got maybe a high probability it wants to come revisit the neckline. Will it break further? We got to see. Maybe we'll continue breaking above there, and you guys know the drill. If it breaks above and closes above, this zone, which was resistance, turns to support. A red candle turns to a bullish candle, a green candle. We look for the retest. Once it retests and it's support, it's gone. And then we continue trading with the trend, right? Higher high, higher low, new higher high, higher low, and it's gone. Okay. So does it always do that? No, but it's good to know that that's what we're looking for when we're trading. And that's just a simple break and retest. It's nothing spectacular in the markets. It's not no secret. You know what I mean? We don't need to be charging you guys $10,000 course to teach you that. It's pretty basic. Okay. So when I talk about basic patterns, I'll tell you guys what are the basics, what's a little bit more advanced, and what you should be learning right away when you come into the markets. Make sure you know your basics. What is a bullish engulfing candle? What is a hammer? What is a wick on a candle? Why are the bodies so important? Because they represent the volume. Why are the bigger body candles more important than the candles with like low volume or no volume? So once you understand all of those, I'm telling you, trading will just come together like a pieces in a puzzle. Okay, so I'm not going to focus on the 5 minutes right now because I just spent a good 5 minutes talking about that. But hopefully that helped. It's just a good review. This is our first session of the new year. So it's good to just get caught up, see how everybody's doing. And you know what? I feel really, really silly right now. I haven't even said hello to everybody because I want to get right into it, but I cannot do that without saying hello to everyone. Justin, Happy New Year, brother. Thank you for joining. Sergio, Happy New Year to you. Timmy, Dennis, guys, Dennis right over here. Dennis, you shared something. Was it in commodities or indices? Dennis, where did you post those trades you took with those smaller sizing? Ron smokes too much weed over here, Dennis. Where did you post it? Gold? In the commodity? Holy shit. How? Here it is, guys. Look at this. Okay, this is, if you guys read on my screen to the left side of the chart here in the Discord, bang, right over here. This is Dennis. He's from London, just down the street from me. So for any traders out there that think that you have to use 10 lots to make money, you don't. You don't got to use a standard lot. You don't got to use 10 lots. This is not me talking. This is Dennis in our group over here. These trades were taken in different times since December 20. My goal was to take 10 trades at 0.01. Those are as small as you can take. Those are micro sizing. But look at how they can add up, right? Which is 10 cents, 10 cents per pip, right? Not $1, not $10, 10 cents. They add up, right? Compound mathematics. And my goal was to take 10 trades with that and to make $1,000. So he set himself up with a goal. He did it realistically. He wasn't over leveraged, taking big sizing. And you can see he set himself up with a plan and he got there. So this is how trading works, guys. You got to set yourself up with a plan and follow through with it. As you can see of the one trade, I used $1 sizing by accident. Okay, we make mistakes, right? That's why we got to kind of eliminate some mistakes when we're trading. I always remind us, guys, check your lot sizing, check what security you're on. If you're switching from gold to Dow Jones, I have to switch my sizing because they're different securities. I can't make that mistake because it could be costly. So I make those mistakes. Everyone makes some mistakes. They're normal, guys, but you got to, learn from them. So you give yourself, when you're about to take a trade, give yourself that quick little checklist. Am I trading the right size? Am I doing this? Am I doing that? So you got to understand that, yes, we make mistakes, but a little mistake can be recovered, no problem. A big mistake, unfortunately, can hurt us, okay? So I'm not going to read all of this real quick, but 3 trades still going and I'm up approximately $600. Fantastic. Just teaches you to be patient and not to stress, even if it went in the wrong direction to 200 pips. 200 pips is a significant stop loss, but if you're trading with proper risk management, you don't need to panic and things like that. I know a lot of us are trading with 30 pips stop loss and we're leveraged. And when it goes in drawdown of 10, 15 pips, we're panicking. So then you're trading a little bit too large for your sizing, for your account. Just simplify that, guys, by reducing the sizing. That's it. And let the trades work out for themselves, where you don't have to panic. Okay. So again, congratulations. Look at it, like 81, 100, 110, 111, 111, 113, 116. Unbelievable, Dennis. Like, congratulations, brother. Happy New Year to you, okay? And everyone else on the call. Rob, thank you guys for joining. And everyone on YouTube, I appreciate all of you guys as well. I know I got to do a quick top down because it's 7:30 and the futures is opening up in 30 minutes. But Mohammed, welcome. Thank you for joining. Extreme, welcome. Trev Beats, thank you for joining, brother. Shout outs to you. Happy New Year, Trev. Justin, thank you for joining, brother. I appreciate you. Wangem Burrow, 2360, welcome. Thank you for joining. Appreciate you guys. Tony Gold, thank you for joining. Sorry to hear about your Baltimore Ravens. That was a tough loss against Pittsburgh on Sunday night. Man, that kicker missed that. But it was an exciting game, guys. Don't forget, it's American football this weekend, wild card weekend. That's probably what I'll be doing. I'll be glued to the couch all weekend on Saturday and Sunday, not moving. If you guys want to join me, you're welcome to join me. We can watch football together. We can talk about trading. We can have a smoke together, and we can have some fun, okay? So I'm starting off on the daily, okay? So remember we talked about a top-down approach. If I just jump in on the 5 minutes, I just know how it traded right up to 4,500 and retracing a little bit. I don't know how it's been trading yesterday, last week, last month. I have no idea how it's been trading since November, right? So we got to look back, and we have to actually do an analysis on a higher time frame. So this was the previous all-time high up here. You see that healthy pullback. We talked about this for multiple months, and you can see now how we've closed above it. We pushed for a new all-time high. There was that big push down at the end of the year, December 29. You know, it kind of recovered, and we're right back trading almost near all-time highs. Okay, so first thing is, let's identify this high. We know that that's the all-time high of gold. Look at the number. Is that not a nice psychological number? 4,550, right? 4,500, 4,550, 4,600. Also go by quarter increments too. 4,600, 4,625, 4,650, 4,675, 4,700, so on and so forth. That's how you'll figure out those psychological areas, right? Tyler, welcome. Thanks, bro, for joining. Tyler over here on Discord. Welcome all the way live from Mexico. Thank you for joining, bro. I appreciate you. Okay, so now I've got that highlighted. Now, next thing I look for is a zone, okay, off of that all-time high. So normally when I always tell you guys, sometimes you can identify it with a couple bars. You can see where the zone is. If I look at where this big bullish engulfing candle started, I can see it's got a closing spin top bar right here and previous resistance. So maybe I want to start my supporting zone right here at this blue candle and bring it up to either these bodies or to these all-time high wicks. They're not aggressive wicks like a big wick. They're pretty relevant wicks of the same size. So when I'm looking for a zone, this is what kind of I'm looking for. From the all-time high down to those bodies. Does that make sense to everybody right there, what I'm doing? Okay, right there. Why? And then someone will say, well, Ron, why didn't you go down to that body? Ron, why didn't you go all the way down there? And the reason being is, it's hard to explain, but I'll explain it. I see this spin top candle right here where it came up and it closed right there. And then this next day started this bullish ignited candle. So there was good support there, a lot of buyers, and it took it to the all-time high. It opened up again, positive all-time high. Then this huge bearish candle came down and broke that area. So that's how I go with it, guys. There's no real that I sit and stare at this for 2 days to figure this out. You guys see, I just came on the charts for 30 seconds and figured it out. The next thing I do is I go with that zone. You know when they say go with your gut? That's me going with my gut, okay? Someone will say, well, Ron, I put it down there. That's fine. Then you went with your gut. You know what I mean? I'm not saying that you're right or wrong, but we have to at least pick a zone somewhere and go with it. And I'm going to go with this. And I back tested a lot of these zones, so I didn't just discover to do this today or 5 minutes ago. I've been doing this for over 20 years. And I'm telling you guys, they're pretty accurate zones. Some of you guys are doing this without myself or Dave helping you guys out, because we encourage you guys to do your analysis like on a weekend and get ready for your new forecast. And some of you guys have the exact same zones that we identify, and we can match them together, okay? So now, when I'm stretching it into the future, I can see that we are trading right back inside this zone right now. So we are in the zone. We are almost back up to the all-time high, and I'm just going to continue stretching it into the future, okay? So we are literally maybe in the second top of the all-time high. How do I know this? I can see it came up right there. There was the first top. Now you can see there's a neckline. There's support. That right here, 33.20 should be like a supporting area, 33.25 right there. And you can see how the buyers held it up And then look, it came right back up and we're trading right back in here. So it could be possibly a double top ready to come back down and trade into 50% of this big body candle if it breaks this low. If it comes all the way down there, there's the M pattern. That could be the big break of gold, or it holds right there and then it's coming right back up to try and break this all-time high supply. Maybe on the first run up right now, we break right through here. Like maybe it's gold we got a lot going on around the world. So just because Ron says there's a double top up here, we've got some stuff going on right now around the world that the stuff around the world doesn't give a shit that we're in a double top zone, right? If something happens with Venezuela right now, as I'm speaking, something happens in Russia, something happens in Iran, something happens in the Middle East, what the hell does a double top care for what's going on? Gold will break right through this like butter. We'll just cut right through this and we're moving to new all-time highs. Okay, but that's when I look. Is it going to be just an impulse breakout? Is it going to come back, get rejected and still hold that zone? Then we're dumping back down. Then I see that they broke the all-time high. They grabbed some liquidity. It was a fake out. We're back in the supply and we're dropping. Then I go with a sell. However, you guys know my three options. It could be very bullish and it breaks, but then it closes above, right? So then it's just a simple break and retest. So it breaks. Maybe we'll come back down. We flip this red zone green. It retests. The buyers are there. They're pending. They like that the volume closed above. They like their pullback. They're getting in. They're buying it on discount and they're ready to go to 46, 4,700, maybe 5,000. And we're going that way, right? So these are, you got to know the options where the market can move. And you got to understand that it could be one of those three options, right? So that's how we should go about trading, guys. There's no secret how to do this. It's just understand, be patient, wait for confirmations. If you're going to go in on an intuition and or an impulse, then just reduce your sizing, because if it goes against you, you're not risking your entire account. That's it, guys. The more confident you are, the more confluence you have, the more check marks you have on your watch list, then you can start to trade with your normal trading size or feel a little bit confident to up your lot sizing, right? That's how you want to trade. When you're not too sure, go in small. When you have more confidence and you feel good, everything meets your requirements, then you can trade with a little larger sizing. But when you're feeling the market out, go in small. It's just like testing the waters. Go in, test the water out. If you see what you like, then go in. If you test the water and it goes against you, okay, no worries. Be humble, close the trade, lose a little bit, but just then maybe you're going to switch your bias and go opposite direction. Okay. So right now we're trading inside here. Can I finish off some more analysis on my daily? Absolutely. This was another point of interest. This previous all-time high right here, that was the previous all-time high, but you see it was previous all-time high. Now it's a point of interest because we have a new all-time high. So this is where I go yellow, and you can see how, again, how it came right back up there and pushed down. There was the first body that closed above. So when this big bearish candle came down, why did we not get support there? You see how it closed below. So that tells me it was a very bearish day where sellers were in complete control, closing near the low. Next day, look at when it came up right into there, and then they pushed it back down. So it's still resistance. I don't see any blue volume closing above. Next day again, came up there, rejected. Next day again, rejected. Then right here, look, start of the new year, Monday, January 5th. Didn't we have something go on in Venezuela and things like that just happened this week? And look at gold, bullish ignited bar, broke right through those wicks, did its job, closed above. So now with this, it's a point of interest. If it ever comes back down, we could be looking to buy here. And I can see, maybe I cut it in half now. I manipulate it myself. How do I cut it in half? Open, close, that's a significant body volume. Why? Because it closed above these wicks. So buyers show me how strong they are, and it closed near the high. And I can see we have not retraced back into this body of this candle. So how do I acknowledge where's 50%? How do I know where's the point of control? Very easy, guys. So here's your 50% point of control webinar. Go grab your Fibonacci tool from the opening balance and go to the closing balance. And you see right there, the yellow line. Now just bring it down to 0.5, 50%, and then the one above and one below of your Fibonacci, 618382, there's your bullish point of control. There it is. Box it in, make it green, make it whatever color you want. This is buyers can, okay, now listen to the different words I'm going to say, because everyone gets confused. This can be named buyers, buying zone. It could be named support, supporting zone. This can be called demand zone. This can be called green box. This can be called point of control. This can be called an order block. This can be called a chicken nugget box. This can be called a Mickey Mouse box. I don't care what you call this. Just understand what it represents. Over here backwards, you see how it was a red box. If I had it red regarding this big bearish candle, when it closed below, you can see if I flip it red, this was a big blue candle. Buyers came in there. What were the results? Red box, sellers pushed it down. Came back in there, sellers pushed it down. Came back in there, sellers pushed it down. Stretch it across. There's the closing evidence. Now the body closes above. I patiently waited for this daily candle to close, and now I see it closing. Flip the color of the zone now to support buyers. Maybe now buyers are pending. Look, gold is trading all the way up here. They missed that pullback right there at 4427. And look at right there. They didn't get engaged, so maybe they're still pending in here. If it breaks through here, maybe look at where the big buyers are waiting, where the entire structure held support right there. You cut that body in half. There's a wick, a wick, a wick. Look at where that wick came down, swept the liquidity. Look at where it closed. Right at that yellow line, look at the bullish candle. Came up all the way up there, and look at where it closed right there. Then it's the weekend. Friday, we had some news over the weekend. Venezuela, boom, it's gone, right? So you can still see this is a nice area to look for a buy, but the better discounted area is right here because this is where the entire move started. That's that big selling day, and look at where the buyers held right here. So that's what we call a real bottom, where it came up, back down. There is that big push from there. If it ever comes back down there, that's why it's that M bottom. That's what I mean. It can break, and if it closes below there, when it comes back up with buyers, that's where the sellers step in, and that's where the market could go down. However, if the buyers are there and holding it up, then it could be that one big massive move coming right back up. But we're nowhere near here, so we don't really have to talk about this tonight. This is just put it in the future. See this area right here, right click it. Hopefully you guys bought the Trading View. It was 80% off on, Black Friday deals, and you can allow for alerts. So right there, I'm adding an alert because Ron upgraded to the plus version, whatever the hell it's called on Trading View, and I can add an alert. I can wait there. This alert has no expiry date. I can wait if gold comes down here next week, next month, maybe next October, gold is back down in here. When it comes down here, Ron will be ready, waiting with a joint in hand, and I'm waiting to see the reaction in this box. That's how I can patiently get paid every single day, is by doing my charting, doing my analysis ahead of time, predicting what will happen in the future. How do I predict it? Simple, by doing my charting and stretching everything into the future, okay? So I know that this is a nice area to buy, but this is a better area. It's a better discounted area. The bigger buyers came in here. That's where that big ignited bar came in. So I'm going to add an alert there as well, right? So now I've got good buying alerts if it ever comes down there, okay? So now let's follow the volume from Big Monday's candle. Okay, we closed near the high. We opened. That's where we closed and where we opened. So any candle, guys, pay attention. Any candle, any time frame, whether it's a daily, a weekly, an hourly, a 5-minute candle, where they close and where the next candle opens is a point of interest, okay? I just saved you guys thousands of dollars on a course right now, okay? So that's a point of interest. Why? I get this question. If I had 10 cents for everyone that asked me this question, I would have been retired years ago. They asked me, Ron, why is it important where the candle closes? Well, think about it. That's where the auction closed, okay? This was an entire day's auction. It could have closed up here. It could have closed down here. It could have closed down here. It could have closed over here. It closed right there. That's facts, okay? I don't argue facts. That's when this bar closed. You know, think about it at the bar. You know, when you go to the bar, you go to for some drinks, the bar closes at a certain time. You can't stay in the bar any longer. They'll kick you out. So this is what, in another word for candles, is called a bar. I don't encourage drinking, okay? So remember, drinking is bad. So don't go drinking. I'm just saying that this is, we call these candles, we call them bars as well. But I'm using an analogy. When the bar closes, it's closing time, okay? So that's where that bar closed. Now, the next day is when the bar opens up again. So then it's got to be an important time. So that's what I do. And then now I also look at the number. If the number is also complementing me at a psychological zone, I say, so I got a check mark at the closing price, check mark at the opening price. It's at a nice psychological area. Now things are starting to put the pieces of the puzzle together, okay? So I can see it closed and it opened right there. I look at the number, 4448 and a quarter. I can round that up by $1.75 and I get to my nice whole round number, 4450, 4450, right? So it's nice opening price, but when it opened, it was initially bearish. It came down. It was black, bearish, 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 but did it come all the way back into our point of control zone? No. So this is what I call a shallow pullback. It came down, but the buyers were there. They protected the depth of market. They created a higher low, right? And they did not allow it to come in here. So what is that telling me? That's telling me that the buyers are asking to trade here. You know, they are pending down here, but they want to get in because they want to maybe push this market up. Why? Because the wick is rather small. If they get it back to the opening price, look at how the size of the wick. They could probably pop that wick and drive it further, okay? So make sure you guys understand this because you might see this on a 5-minute candle. You might see this on a 1-minute candle. You may see this on a 30-minute candle. And if that's the time frame you're trading, you're going to remember Unk talking about an opening and a closing price. Okay, so that's a shallow pullback. That's also a low of a day, okay? We're working on today's daily candle right here, but if I was working on this candle, I would be acknowledging that as a low of the day and I would be putting a purple line down there, okay? And then that would be also a very important point of interest. That's the lowest point of that day. I'll do it with this body over here on our next one, but I'm just kind of walking us into how we were trading because I missed yesterday with you guys. So higher low, we did not come in here. Buyers are still rather strong, okay? Short wick. They came back to the opening price, they popped it, and we made a high yesterday right up there. Did we come and get up to this point of interest? Remember, that's the all-time high right up there. But what about where did this bar close prior to hitting the all-time high? So I can see on this day, Friday, December 26th, Boxing Day. Guys, did you guys see that ice I had on my car over here? If you go to that free Telegram channel, this was the Boxing Day. We got hit with an ice storm. I think it's here. And it was, I don't know where it is. It's somewhere in here. I think I posted it in here. But if you saw how much ice we got, if you guys want to enjoy ice weather, snow, move up to Canada and we'll show you guys some Canadian weather. But it was bad. We couldn't even move out of the house. That's how bad it was. So it closed up there and it opened. So maybe that's a point of interest if we get back up there, 4532, okay? And then maybe it comes up there and it's a lower high. And these sellers who sold that big daily candle, maybe they're protecting the all-time high and creating a lower high and want to push the market down. However, if it breaks above there, look at the size of the all-time high wicks. We could probably break those and go for a new high, okay? Are we there yet? No. Can I place an alert there? Absolutely. I can wait there. And when it gets there, that doesn't mean I just trade blind. I don't just buy and sell when it gets there. I watch what's happening, right? Because I know that there's going to be a reaction up there, okay? So I can see now, let's follow the closing volume. We came up, we made a high, we closed. It was a pretty small wick, right? So it's telling me that we closed like 98% right near the high. So that's telling me that's a very bullish candle closing right near the high. There's the closing price. There's the opening price today. 4495. Let's just round it up. 4495. Okay. And then look at when we opened. It opened bullish, small wick. There was a pop, but not really a big move to fill all the way this big black candle all the way to that point of interest. You can see now we've made a high of the day. And what number is it? You guys know. The start of the call, we were at that 5 minutes. 4,500 on the dot. Look, 4,500 and some change. Why? Did it just come up to 4,500 just because? Did we get lucky tonight? I'm going to say there is a little bit of luck involved in trading, but when you start to see that this luck is happening every single day, then you can start to say that you're learning something. You're learning how the markets are operating, right? The markets are a financial engineered system that is operated by market makers. It's operated by corporations. It's operated by financial institutions. It's operated by liquidity. It's operated by news. It's an operation. And so when we figure out and learn how this operation moves, you and I are going to become financial engineers. We don't have certificates. We're not licensed. We're just some traders who smoke some weed and trade in our basements down here. I'm going to call this the bunker. Okay, so this is the sniper bunker where I'm in right now. So in case some shit is going on in Canada and Greenland and USA, Ron is safe in this bunker here trading with you guys. Okay, so this is the sniper bunker. So I'll be in here with whatever the hell is happening over the world. I'll be in here safe with you guys. So we got soundproof walls, so we're good in here. So look, it came up to 4,500. Rejection, come back down, revisiting the opening price, and sellers are in control. They're pushing it down, okay? Do we have a low wick? There is a tiny wick. So I know we're trading right now at the lowest point of the day. I know it's real early because this candle still has 21 hours to go. So it will probably break even lower and push maybe even further down. Where will it go down to? I'm going to say down, there's a daily body right there and a body right there. You know, when I say locate points of interest at daily bodies, I could place a yellow line there. If I wanted to, place a yellow line. You see, I'm targeting that closing body, that big blue body. But since we're right near the bottom of the red zone, remember the red zone is where I kind of located those bodies. So that's where that point of interest is, right there, those bodies. Remember when I made this big red zone in the first place? It's right there. So if we continue to sell down, maybe the buyers will step in right there and produce a wick and bring it back up. If the sellers break right there, they could come all the way down. Where could they come down to? Again, maybe 50% of this big bullish candle. How do we identify that? Grab your Fibonacci, opening price, closing price. Where's the 50%, the 0.5? It's right there. See how close it is to, that zone? So I know that that's kind of the point of interest. You see, it's the 618382. If I was to draw a green zone, look at where I'm drawing it. It's right there. So that's where it could come bearish, gather some buyers, again, get a wick, and come back up to break. If it loses this, then we might have a high probability we're going to revisit the opening balance. If the opening balance doesn't hold, then we might be coming down to the lowest point of the previous candle, the previous bar. In this situation, it's the previous day, right? So once I acknowledge that, again, stretch it into the future. Maybe I'll place an alert just in case it gets in there at that yellow line. I look at the number 4471. Okay, maybe it comes in there. So right now, the daily candle is bearish. Okay, we're in the second top. It's got a lower high, and now we're coming down. But it could come into one of these zones and go right back up, right? But right now, if I'm looking on the overall time frame, it's bullish. Okay, I can see this big monster run up. There was a big massive candle sell, but didn't do much, didn't close below here, held good support, this consolidated area. You can see how you can tell that this is a consolidated shit area. Look at the candles, look at the wicks. If I was to consolidate this entire area, look, wick, body, wick, body. It broke wick. I hate trading this type of volume. If this was 5 minutes, I would tell you guys, let's trap this shit. Maybe just, it's a consolidated bullish flag. Maybe we continue buying with it. But look at if you stretch this zone into the future. Again, look at where this kind of consolidation occurred, right in here. They did push it down. If you sold on impulse. You sold before the bar closed. Then that's on you, right? If you remain disciplined and patient and you waited for the body to close, you see it close back in here, next day came back up, closed, and then you could have been buying again, and you see how that zone held in there, okay? I don't need to stretch that across into the future, but I just want you guys to acknowledge how the volume is trading after it came out of there. So that's an accumulated area where sellers and buyers were accumulating. Then it went back up, came back in there. Again, some accumulation, and the buyers are bringing it right back up, okay? But right now, we've got this big bearish daily bar coming down. So now I'm going to break this daily candle down into the 4 hours. So you can see, I still see a lot of candlesticks. I see a big bearish one. I can see a spin top one. I can see same type of candlesticks if I was on the daily, I see now on the 4 hour. That's what I mean, guys. All candlesticks have the same characteristics. When you learn one, you're going to learn them all. And then you just pick the time frame you want to trade off of, okay? So now we see this big, I can tell now what time, Sunday, 6 p.m., this big bullish engulfing candle. That was Venezuela news. Markets are opening up. digested. Look, it's a double bottom. News officially launched at the second bottom where it traditionally has more volume. Do I not sound like a tape recorder? Like every single time it's leading up and then there's a news event that comes in right at that time. Call me crazy, but I've seen it happen years and years and years like this. So you just got to be ready, patiently waiting, and trade accordingly with news and volume, okay? If you see a trend, you trade with the trend as much as you can. If you're counter trading, make sure you have counter trading rules, okay? And you got to have rules in any game you play. If we're playing basketball, football, hockey, or soccer, there's rules in that game. If you don't follow the rules of the game, it's going to be probably a pretty shitty game and you might lose. Same with trading. Trading, it has rules. You have to follow the rules of trading. If you don't, you'll possibly lose, okay? So there's rules of the game. You understand. If you're counter trading, if you sold this 4-hour candle, it's a nice candle, it's sold, it didn't go, but you got to know you're going against this big massive trend. So maybe you caught that counter trade, you pipped and you dipped out of the market because you have to give respect to the buyers that they're still pushing the market back up. Well, I can see now a 4-hour candle is coming down ever since we opened. So it's coming down. It could just pull back down and go right back up and then it's bullish again. See, I got to wait now. If I'm a 4-hour trader, this candle still has 2 more hours to go. So it can go back up, it can go even further down. But you see, we haven't really revisited this green box. The last 4-hour candle, that's the lowest point. Okay, we've got a higher low so far printed and it's coming back up. Will it break even lower, come down here, the green box? Remember, this is maybe a possible good buying opportunity right here, this daily point of interest at 50% of the green zone. However, it could come down here. And if this 4-hour volume comes back down and closes below here, guess what I'm going to do? If the 4-hour candle proves to me it closes below this green zone, I'm going to flip this zone red because it might be now ongoing resistance. And then I know we're still below the big all-time high supply. I could now make a 4-hour bearish block right here, and then maybe it's got more room to sell off, okay? And then I could catch maybe a nice 4-hour selling leg coming down. But I got to know that I'm also still trading against this strong bullish move. So it might revisit this area here, and I can see 4-hour volume stopped there. A wick came down, closed above, retested it. There's good support there. And it's at 4450. And I know that that's a daily point of interest. So maybe the 4-hour volume came up. Maybe it wants to come back down, maybe break there. But when it gets there, that's it. Maybe the buyers are there to push it right back up. But you see, then I go with this 4-hour zone. If it's red and it gets rejected, I know it's a lower high, then they might be coming down to break this. And we're filling that wick and we're dropping right down here. I'm a line-to-line trader. I'm a tape-to-tape trader. It's a very, very old school technique. But when you measure from like this yellow line to this yellow line, and you can do this on the 5 minutes, I'm doing it here on a 4-hour to show you guys. When I measure that, I know that this, if I'm selling from distance A to distance B, it's this much dollars, $20 in gold, which is, I know how to calculate that into pips. It's 200 pips. So if I get that fill from there to there, that could be my daily goal. And that's it. When it gets down there, that's it. I went to work, I clocked in, and I clock out, and I go home. And that's what trading should be. When you hit your daily goals, treat it like it's your 9-to-5 job. Go in, get out, get your daily goal, and stop trading. Don't be greedy. Learn some discipline. Go on. Remember what I said? You got to balance life. Balance your family. Balance your schooling. Balance your work. Balance your trading. Balance yourself. Go to the gym. Get some exercise. Eat healthy. You know, with balance, you're going to continue to be that much better of a trader. Your mind will start to work better. You're going to be more engaged when you're trading. You're learning, and then you start to see consistent results. You're going to get more better when you see consistent, profitable trading days. You're going to start to say, okay, now I'm not just trading for one day. I got 1 week together. I got a month together. I got 6 months together. Maybe you had a very profitable 2025, and it's been your first profitable year you've ever had in trading. And hopefully a lot of us get there, okay? But you got to get there with some discipline. So you're not guessing and gambling all day, okay? You want to make this very routine, very boring, okay? So you see how we just came down, we made a low and it's coming right back up. So let me break this 4-hour candle down now into 1-hour increments. So I can see that they were barcoding. They were consolidating up here. Look at the timing. This is 9 a.m. This is Wall Street. Bullish, came back down, 10 a.m. news, back down, came back up, held, came pushed up, back down. So I got a bullish candle, bearish candle, bullish candle, bearish candle, That's a flag, consolidating, and then that's when we just opened right there, 6 p.m., hit the highest point, and now we're coming down. So this hourly candle came all the way down. Here's the close, because now we're going into the futures right now. So it came down, it's coming right back up. There's the close. Now I'm going to go into the 5 minutes. This is the closing. Look, it's a big bullish engulfing candle closing, okay? So you see how we just broke down. If I catch a pullback, I'm looking to maybe buy maybe right here. Where did that? I'm just marking this up on the 5 minutes, okay? If I'm looking to buy a pullback, maybe I'm waiting for it to come back down here, somewhere around 4.85. I'm looking for it to come back down, maybe right here where this big bullish candle developed. Maybe it might be more pending orders, and then it fills those orders, and maybe it's going to come revisit here, maybe break for today's daily high. Okay, but what happens if the sellers bring it back down here? And look, they've already damaged it, right? Remember, the wicks do the damage, the body tells the story. So it came back up and closed right there, and we started 8 p.m. That's the futures market, big bullish ignited candle. We see how it just got rejected right at that yellow daily marker, and now it's coming right back down. So what happens if it turns black and closes below there, and we flip this? That could be red selling down into that buying area right down there, okay? And that's where the bigger buyers could be waiting down in there. If it's real selling volume, maybe we'll cut through this area, okay? But right now, you see the first retest, it just revisited. Remember that purple line was the previous daily low, and you see now how it's holding as support right now, okay? So maybe we wait this out. We see where this body closes. Now you see how it's in between a yellow line and kind of like a purple line here. I could now consolidate this entire zone just by the lines, you know? So you don't even have to look at the bodies of the candles. You just focus on the lines. See how I mapped it right out to that yellow line, and I mapped it out to that purple line. Now you see, if you bought and you didn't do anything up there, look at the market maybe faked you out, and look at now it's bearish coming all the way back down. Okay, so this is that bearish trend that we have pushing down from that previous high coming down now. So you still see how the sellers are still hanging on to the momentum. That looks like a big fake out wick, maybe where they grab some liquidity, and we're still in this descending triangle breaking down here, okay? So this candle is still going to close in 3 minutes. It's a lot of time, okay? So do we wait for this candle to close, or do we just trade this candle right now? That's up to you. I'm going to wait for this full body candle to close because I know it's 8 p.m. I know the futures market just opened up. There could be some news going on, but maybe I let the buyers and sellers fight it out right now to see, will the sellers be able to close it below here? Will the buyers bring it right back up, close it inside here? Will they reverse this entire candle and then go back up bullish? I don't know. So what I got to do is I got to wait for it. While I'm waiting, I can add my indicators. I got a Stock Sniper Trading daily bar indicator right here. So it's a daily bar right now. I can change this and put it on a 4-hour. I can put it on a 1 hour. I can also put it on a 15-minute, whatever higher time frame I want to watch while I'm on the 5 minutes. I prefer like daily, because just to show you our opening balance, that was the highest point of the day. That was that big rejection at 4,500, and you see it's still holding, and now we're all the way down in here. So now it just broke that 5-minute low, so we're in this trend still going down. I see a lower low, lower high, lower low, lower high, lower low. That big move at futures where they faked out all those buyers is technically a lower high, and they pushed it right back down, and now we just created a new lower low. So where will this bar close in the next 90 seconds? Okay. Big candles, big volume, guys. Like if I just measure this entire range of this candle from the highest point, the range, measuring the range, all the way, this is a 150 pip candle right now. This is a $15 candle in gold. This is a this is a big candle. Okay. So, you know, if we're trading with 20, 30 pips of a stop loss, you can see you could easily get tagged out. Even with 100 pip stop loss, if you go wrong direction, you could get stopped out. That's why if you don't know what you're doing and you're using large lot sizing or large contracts, you could do some damage to your accounts, okay? So now what I'm looking for is the body to close. It looks like it might be a big bearish engulfing candle. Again, what I want to do, I want to directly cut it in half. I want to find the bearish point of control, and I want to see if the buyers will bring it back in. Maybe I can sell at now a premium area when it comes back there, sell down, or maybe this will close at the lowest point and just continue moving down and try to break this daily position right here. But I have a system where I always don't just want to kind of just sell the lows or buy the highs. you know, it's best practice to be patient and wait for it to pull back so you get a corrective pullback. Sometimes you're going to miss out on those pullbacks. It happens, guys. You know, if the volume is strong and it continues moving, but you got to understand, if it happens, it happens. The best practice in trading, in my opinion, is still to be patient, still wait disciplined. It may not come in the next candle. It might not come in the next 30 minutes, but it might come in the next hour, right? I'd rather wait for it, take a trade, and maybe it's more successful than just trading anything, right? So now it's moving down, okay? So what I can do is, real quickly, grab my Fibonacci tool. That's a big bearish engulfing candle. I can see it closed below some structure. So that's a good candle to identify. Opening balance, closing, right? Same thing I did on the daily, on the 4 hour, on the hourly. I'm doing it on this 5 minute candle. Okay, where's 50%? It's right there. See the purple line? So I'm just going to use that same purple line, bring it down to 50%. I can still see the market is moving down. Okay, maybe I missed the sell. Maybe I could look to buy a pullback, or I got to wait patiently to sell up in here. Where will it come back? There's the 382618. There's the bearish point of control of that 5 minute opening candle. It's right there. Okay, so I can wait now to see if it comes back, because I see it hasn't traded, retested back in this red location, and there's the trend line. I'm getting more confirmations. Maybe if it comes in there, more sellers are there to continue maybe to push it down and create new lows. Okay, maybe it doesn't come to me right now. It might be after the call. Okay, so what I got to do is continue to watch here. There was significant buyers right here at 2:15. They came in at 2:30 p.m. They came in just near the end of the day. So when gold dropped down there, that's what caused that big leg coming back up. So we're coming right back down into this location. Now, do these sellers have enough volume to close it below these wicks and maybe have one more further push down? And that's the heart of that demand area on the higher time frame, right in there, that daily point of interest. So that's where maybe the bigger buyers are, and that's where this selling could maybe stop down in here, because they're selling to where the big buyers are. And I can see there's a wick there and a wick there earlier today at 10:45 and going into 11 a.m. So you see how the market is now retracing right back down into there. Okay, so this I stretch into the future. I've missed the sell now. Does that mean I just jump in right now? No, we don't want to learn FOMO trading, guys. Believe me, you don't want to just jump in because you're excited, because you might be selling at the lowest point where the buyers are. And then it comes back up blue and you're in drawdown. Okay, this is for if you're in a sell. Maybe you should be understanding that this is where the buyers could be, and maybe it's time to trim some of your winnings here, take some profit out by respecting that there could be buyers here. Okay, maybe you're still holding and the volume continues to break down and close below. Then we continue to use this yellow line as selling resistance. Maybe we'll have one more leg to continue to push down. Okay, but I don't trade with hypotheticals. I don't trade with what would have happened, should have happened, could have happened. I trade from like one line to the next line. I make a decision and I live with it. Okay, that's how I've been trading. I've left a lot of money on the table. Yes, I have, by trading like this, but I've also secured a lot of money by trading like this, because there's been a lot of times you guys have seen me live where I'm holding trades and then I'm in profit and then it comes all the way back up and either hits my break even, I don't cash out nothing, I don't win, I don't lose, or it might hit even my stop loss if I haven't adjusted my risk. Okay, so I'm just waiting for this bar to close now in 90 seconds. So what I could do up here is place an alert. Maybe I'm looking to sell if it comes back in this location, okay, at the purple line. Okay, guys, make sure if we can all hit the likes on YouTube. We appreciate you guys. Subscribe to the channel. You know, let's try and pump this up to 92,000 this week. Let's see if we can get there. We're going to do Tokyo sessions this week, some education next week, and then we're going to go right back into New York's. Okay. So did that help, guys? Today was more of a refresher call because I haven't been on the call with you guys for over like 2 weeks now. So a lot of you guys still have a lot of eggnog in you guys. Maybe some of you guys had a little bit of a good holiday, but you know, I just wanted to go over just a few basics to get everyone back into the flow. And okay, so we see it came down to that yellow line. That's the new lowest point of the day right there. And now it's got a wick, but still we got to respect this big body of volume. Okay, if it closes below here, I'm going to cut it in half because it could come back up blue, get rejected, and try and come back down. Then maybe we see if there's a couple bottoms here. Maybe we see if there's more wicks creating here. Then we know that there is some buyers possibly accumulating at this daily point of interest, okay? But we still have to respect that we got a lot of selling pressure coming when the futures market opened up right at 8 p.m., okay? And you can see, like, there's a little clue how they kind of faked out the market. They brought it up blue, 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 and they extended it out. And if you bought that excitement, you can see you're in drawdown, okay? And if you just waited a couple more seconds, could have maybe caught that. So I see that the candle opened ignited bearish right away. So I know when a candle opens ignited bearish, it's a strong opening of sellers. And look at what they're doing. It didn't even open up blue to come back up and test 50%. So I know it's still got a lot of selling pressure, and they're pushing down, filling the wick, and they created a new low. So they could continue to extend this down. So you can see why it's important to understand opening balances of candles, because if you're in a sell, you can maybe hold longer. If you're looking to buy when it's coming down, then maybe you're not taking the buy, because you can see how it opens so strong and bearish, right? So watching candles as they open, close, the size of the wicks, you're learning and to predict maybe the next bar, okay? And believe me, if you follow these things, you'll learn the language of trading. Just because you're not in a trade doesn't mean it's time to start scrolling on TikTok and look what's going on there. You got to be watching these bars, especially if you want to scalp the markets, guys. Especially, listen to me, if you guys want to scalp these markets, the markets are fast, okay? So you have to be fast to understand what's going on. If you're guessing or you're asking what's going on, then I can tell that you need some more learning, okay? So again, we came down to that yellow line. Buyers are there, okay? So you can see that they're rejecting the move. They're bringing it right back up. So now, will this candle flip into a bullish pin bar or a bullish hammer candle? Will it turn blue? Because right now we're back to the opening balance and it's still black. So sellers could come in and again push it right back down. Okay, but we're still below that daily point of interest. See how, again, it turned black and we're still pushing down? I haven't seen the candle turn blue yet with 3 minutes to go. Okay, so I still got to respect that there is still sellers here. Guys, sorry, I need to get a drink because my mouth is getting a little dry here from talking too much. Okay, so to the sellers, you could have kind of trimmed a little bit right down to that yellow line. If you didn't, okay, no worries. You're still in the money, but now we're revisiting this bearish candle. Did we cut it in half? Okay, so let's see now. We got the buyers coming back up, but it could just be an inside bar, and the next bar again is bearish and come back down. Okay, but you see where it's building some support right now? Did we just guess that yellow line? No. If you rewind the call, you saw when we figured out some daily points of interest, okay? So was anyone in a sell? Did anyone do anything down there? Is anyone buying right now? Okay, so you still see we're still in this big green zone. We're at that daily point of interest. The buyers are technically there, but they're not really, closing above 50% of that candle. So we still have lower highs. We're still below 50%. We have another lower high. So we still have some sellers. But right now we could be now consolidating to see if we're going to get one more move to come back up here, or are we going to just continue selling back down? Okay. So sometimes you might miss a trade, but now you can sit back and watch again what's going on. And I know a new 15-minute candle is going to open too in 1 minute, okay? So if you follow 15-minute candles, this is the first opening 15-minute candle of the futures market. So we got a lot of 15-minute bearish volume that's pushing below these lows. It might close with 15-minute. So we might still have further selling pressure to come down unless they do something, they manipulate it and they start the new 15-minute candle bullish and bring it right back up, okay? But I follow them on the 5 minutes. I'm also trading like 1 minute candles, right? Like this is what I like to scalp. See the bearish bar close below, there's the retest. I'm sometimes right in that bar, sell. My stop loss is at this point of interest. And just in 2 minutes, I catch my pips and in and out, pip and dip, okay? But I'm going to stay on the fives with you guys here. Last 30 seconds, I always tell you guys, is the most important time of a candle close. It's like a basketball game. This is the 24-second shot clock now. So who is going to have the momentum going into the close? So you still see sellers lower high, pushing it down, broke, lower low, still coming down. So I have to give it up to the sellers that they're still pushing it down, okay? So buyers are still technically getting trapped. And this could also have one more bearish bar to push down, okay? There's the opening. It opened blue, ignited. If you want to cut this candle in half, you're more than welcome to, okay? But you can see that we're trading in this zone right now. Is it a good time to buy? You could entertain a buy. We are still at this daily point of interest, but we do not have a bullish candle even create one higher high, and we don't have a closing blue candle yet. So again, if we buy, we're just buying because we think the buyers are here at this daily point of interest. That's where I would go with maybe like a feeler position, because you're buying like the first leg. And then maybe if it comes back down, we know that double bottoms and second bottoms are traditionally the stronger legs. Maybe now if buyers are buying, we're going to figure out where the neckline is, right? And then that's sometimes where you got to figure out how the market is moving in order to figure out the next leg. Okay, so this is a big bullish candle. It's the new 15-minute candle. Remember what I was just saying? See how they opened the 15-minute candle bullish? But if it even comes up, look how much it has to do. I've already cut some 5-minute bars in half, but if I'm even looking at my 15-minute candle, I can see like I would be right there, the bearish point of control. So I can see already they had a shallow pullback and they're rejecting it right now. So I watch it on the 5 minutes, and this is where it could continue having selling pressure. If it breaks, maybe we could sell down to the bottom of the green box, maybe it breaks even further. Okay, so there's that push down. And it could continue to move down with that 15-minute volume. But you see when it comes down, it didn't break the low, still got some bullish volume, still filling up and coming back up, okay? So we're in a candle that's consolidating within itself, and it's coming right back up bullish, okay? So maybe we got to watch now. Now we found a zone where there's buyers and sellers inside here. And you see, I was waiting for a retest of 50% of this candle. It didn't come up there. I was waiting to sell the opening balance of that point of control. It's not there yet, okay? So I got to continue to watch what's going on here. And if it still continues to hold and close above, maybe we're building a little bit of support to get us a nice little leg to come and retrace back up here, okay? But I still see lower highs, lower highs. I don't see any convincing blue volume closing above either 50% of a bearish candle, let alone closing above or engulfing a black candle, okay? And we're at the halfway point, 2.5 minutes to go. So now you're starting to see we are getting some support here at the yellow daily line, but the 5-minute candles are still building. We're in a higher time frame green zone, but we're coming down with some bearish volume to open up the futures market, which could technically continue to break down. And then you see that lowest point right there. Let's acknowledge this lowest point just in case, because if they break 4463, big buyers could be there. There's the break of the low, maybe a liquidity sweep. We know we're at a nice discounted area. That would be a nice prime area to buy. And then look at there. You're inside 50% of that big bullish candle right there. Like if I was to cut that in half and find my zones, there it is, that big body candle. Okay, so if I'm looking to buy, again, nice premium buying, or like a nice discounted premium buying area is down in there. However, it might not come down there. What if it's building right here to continue its leg back up? Okay, so I'm going to watch this candle right into the close. What are you guys thinking? Should we be entertaining buys? We got a nice big bullish engulfing candle coming up now with about 1 minute to go. So let's see if it can engulf. Let's see if it can break for a new high. Let's see if it can close above here. Maybe we can catch a pullback. But I see the yellow line is still holding some good supporting area here. That's why when you're in sells, guys, it's not a bad idea to close some profit down at these daily points of interest. That's why I'm telling you, a nice top-down analysis can set you guys up for success when you're trading. Okay, I'm just going to take a look at my spreads now. Let's just see what's going on here. UNC might get involved here. Let's see what gold. 0.5. Okay, that's okay. I like that. And we got now 30 seconds to go into the close. So did it come and produce a new high? No. We still have a lower high. Look at now going into the close. Sellers came and really kind of rejected that big blue volume, okay? So they could push it down. Next bar could be black and we're again pushing down. Then maybe we continue selling with this market, okay? And then we got to maybe do something if it comes down into here, okay? So here's the close, okay? Open bullish ignited again. They rejected it quickly. Okay, will it build? Will it build? Will it build? I'm giving it this much building room. Since we're right by that like yellow line in that wick, this is the building zone I'm giving it. If I don't see buyers building like right now inside here, then this thing could break and we got sellers in full control and we could be building a bear flag and continue pushing down. But you still see how it's got that wick still at that yellow line. So that daily point of interest is still technically holding, but you see how the candle flipped now? Okay, so it's still holding. Still holding. If it's like one of these doji bars and it holds, it could easily maybe hold and fill these wicks and start to break out to that next yellow line. So it could be looking where we're building some consolidated support here and ready to start this next bullish leg coming back up, okay? But it could just come up here and then they reject it back down. Then we look for the second bottom again down in here. So it is holding. It technically is breaking out. I'm going to go on a buy because it retested. It's a hammer candle. So the body of this candle now that I'm in a buy, its job is to fill that wick and maybe proceed to the next wick. Where am I going to place my stop loss? I could keep it right there below that low, and that's a pretty tight stop loss. But I'm going to give it a little more room to breathe because we've got more volume in the market, and I'm going to give it room to breathe below the bigger green zone because I know that's on a higher time frame. And with a bigger stop loss, then I'm looking for a bigger reward. I'd like to see maybe if we can get back up to the point of interest of these bodies. Ultimately, my goal would be to get it right back up to that selling zone and start to take some partials up there. But I'm in a buy. If I was looking for some quick pips, I could have just quickly pipped and dipped if I'm looking for 10, 20 pips, just like that. That was, just 20, 23 pips. If I wanted one of those, like if you want to be a bang trader and just look for 20 pips, 5 trades a day, you got your 100 pips. That's your daily goal. Welcome to the world of scalping. Right there, if it now moves up 35 pips to the top of the green zone, I know if I target that yellow zone, I could be reducing risk because that's 40 pips, and then it's getting back up to that daily point of interest, and that could be the true neckline of this move, okay? And I know that I'm counter trading, right, this move right now. So you got to also have some counter trading rules. While it's up in profit 30 pips, I don't need to keep my stop loss down there. I can now reduce it right below the wick of the candle. So you see how I've significantly reduced my risk? I'm going to go to a break even right now, okay? So now my trade's at break even. I have no risk in the trade. I'm also, if it taps to that yellow line, I'm going to take out 80%, okay? I'm verbally telling you guys. Now I have zero risk. Is uncleaving 30 pips on the table, maybe possibly 40? Maybe. Okay, and then maybe I'm not following any rules. Okay, so you got to understand, I'm counter trading. I found the bottom at that daily point of interest, but I know that there's strong sellers still up here that have not been tested. So maybe this is going to be a lesson for me. When it comes up 30, 40 pips, you don't do anything. Now the market comes back down. Okay, but if it comes back down and breaks, at least I don't have a stop loss. I have no capital at risk. You see how my emotions are controlled? Worst case scenario is it's a break even. No big deal. It's a scratch. We learn from it and we move forward. Okay. The trading is to protect your capital at all time. Some traders are trading with not with a prop firm. They're trading with their own money. So you got to understand, trading with your own money, there's a lot of emotions involved and you want to really protect your money. Okay. So we're in the money right now. Maybe some of you guys are not looking for 30, 35 pips. Maybe some of you guys are looking for 100, but we got to go bar by bar. We got to see, is it creating, it did its job above this high, but we still are trading against here. So here we go up to the yellow line. There's my target, yellow line. I'm going to stick to what I just told you guys. I'm taking out 80% up there, okay? Because I want to start the year off on a positive note. It's good karma, good way to start the year off that I hit a profitable trade, okay? So I got 80% out up there, and now I got 20% remaining with a break even, okay? And I want to follow the volume to see if it continues to move up, right? We got to follow it. Will it close above here? Will it come back down? Will it produce a double bottom? Is it still going to be selling pressure breaking below here? Then if that's the case, I'm happy that I secured some money, right? I'm counter trading. So you got to have rules. You got to have rules. There's rules to this game. Did I not go over that? And it hit my yellow line. Remember prior to it coming up there, I told you guys verbally, when it comes in, hits that yellow line, no matter what, Unk is taking out 80%. You can go back and rewind the video if you don't believe me. I know what I say, guys. I talk live. I talk fast, but I know what I say. Okay? Did anyone do anything? You don't have to follow what I do, but do you understand how it got me into that buy on that candle? As long as you guys are learning why I bought that candle as opposing to selling it, that yellow line down there told me a lot of supporting evidence, right? I'm still in the money, okay? Now, I could cut this blue bar in half, because if we retrace back down, I'm still in the money if it retests 50% of it. However, if we don't get our buyers there, then it will come back down and maybe test the opening balance. But you see, then my trade will get negated because I'm at a break even. Maybe I went too much to a break even. I should have given it, could have kept the stop loss below the yellow line, gave it a little more room to breathe. But protecting capital is very important, okay? But let's see, it came down, pulled back, shallow pullback. We're still above 50%. So let's see, we got nice blue volume. Can we continue to do the job, fill this wick? That's a rather short wick. So if we break there, we're technically going to trade right up to that red line because I cut that bar in half. And then that will get us 60 pips if you still have a runner, if you're holding your entire trade, okay? And remember, we're still counter trading, but that's a good bar, good volume, but no follow through so far. So it broke. They did not break that. And there's sellers there pushing it right back down. But when it came back down, we refueled a few more pending orders, picked up, came back up. So let's see if we can continue with this momentum, this volume, continue this uphill battle and break these highs and continue to target this red line. And ultimately, you know, you could move your target, if it does break, to the opening balance of that candle, 4483, right? Do you guys have any questions? Any questions? Okay, because I got about 10 more minutes on this call because I got to wrap it up at 8:30. And then we got to also follow the volume. If this blue volume continues to break out, make a high, and it closes above the yellow line, now I know 5-minute volume is supporting new highs and is closing above a daily point of interest. So then maybe we're building some support at these daily, and maybe we have a longer leg to continue to get us to go to the official big target. Remember, originally I wanted to sell at the start of the call up there. So if I'm in a buy and it's coming up there, then I got to know that that's where the big sellers could be. Then I got to close my entire remaining trade up there and respect that red location, because the trade could go down and come back up and then go back down right there, okay? It might not be this leg that we're on. Remember, this is the first bottom down here. The true neckline could be here. So follow my arrow. We came down, we're coming back up. If it doesn't hold, back down. Unfortunately, my break even gets stopped out. But if it comes down there, maybe we're looking for a double bottom above that neckline could break and get up to that bigger target right there, right? So you see how it didn't have enough fuel? It was nice and bullish. It was excited. It was blue, but look, it got rejected because it's still below that big body candle, and now they're pushing it back down. This is a bearish pin bar turned into a shooting star candle. So now you see now it broke its low and it's retesting now exactly 50%. If it can't hold, unfortunately, guys, I'll verbally let you guys know as soon as I get stopped out, but I only have 20% at break even because remember the original bulk of the trade I took out on that previous candle, okay? Are you guys learning? Are you guys learning anything? It's live analysis, live trading. You know, it's not easy to do, but there is a wick down there. I'm still in. They haven't got me out. Again, I don't trade off of this. I trade off of my mobile, and I have a different brokerage, but I tell you guys verbally where I go in, where my stop loss is, where I get out. I'm still in this. So it's a spin top candle. You see this candle is fighting. It opened bullish. Sellers pushed it right back down. Buyers bringing it right back up. We're right back at that opening balance, and sellers are still here pushing it right back down. We got 60 seconds to go into the close. So am I still going to be live in this candle before it closes? Will it flip back up blue? Will I be live and then get another bar rallying back up? Or sellers are going to close it below and then start that next leg down, right? And that's how I trade, guys. You know, like I don't have massive targets to go to the all-time high. I trade from a line to a line, from a zone to a zone. I'm a scalper, intraday trader. I would love if gold could, on this volume, some news be announced and we're going to the all-time high. I would love it. But I normally am in trading just bar by bar. I'm a 1 minute. I don't even trade 5 minutes when I'm trading by myself. I trade 1 minute candles. So sometimes I'm in a trade for just 2-3 minutes and that's it. I'm out, right? And I look for more trades throughout the day. I look for maybe five scalps, 10 scalps. Maybe that's enough to hit my daily goal. And I'm pipping and dipping and I'm balancing life with the other things I do. So, right? I'm still in this now. I never got stopped out down there. So I'm still in. Now the candle got bullish volume. Will it get above and close above that yellow line? It's critical. If it does, it didn't. It failed. But the bar opened bullish ignited, okay? And as soon as it opened, look at what the line, it hit that yellow line and it got rejected. So it's telling me we still have a lot of selling pressure here. It got rejected there, rejected there, rejected there, and rejected there. So that's maybe where that true neckline is, at the daily yellow line. Now it's coming down with that bigger volume, and I can tell it's at 8:30 right now. I don't even look at the time, and I just know by the volume, the way how it's reacting, that it is a 30-minute candle right now. Because I know it's a higher time frame, because I can tell how that open bullish ignited, hit that daily line, and now the bigger sellers at 8:30 are pushing it back down. Okay, but you still see we got a higher low wick still holding in here. I'll verbally let you guys know if I do get stopped out here. I'm still in it, and then now you can see where the volume is consolidating, like it's in this real tight range right in here. Sorry for all of these zones, but this is where it is. So as soon as it breaks this low, still in, there is a higher low there. You haven't got me out yet. 4475 is still holding. His mouth is moving faster than the candles. Yes. I talk fast, right? You should see on the 1 minutes, I lose my voice. Okay, it looks like maybe this push is going to get me out, but there's another wick there. Like, okay, now it's pushing down. I'm still in. There is a wick there, still producing a higher low. 4475 is where the big fight is. It's that psychological number. We've got a lot of buyers and sellers at this level. It's still maintaining its support. However, we do have this resistance at this yellow line, okay? So big fight here. And then if I do get stopped out with the 20%, I'm happy that I cleared 80% up there, right? So that's why I do that. It's for emotion, psychology. I'm still learning with my 20% runner. I'm still in. Now I'm watching the wicks. There's still a higher low. Like you can learn too from, even if you're still in a trade with a trailer, you can still learn what's going on. I'm still emotionally involved in the trade. So lots of selling pressure. Again, they're coming down. So how many times has it came down with offers? So I got a high probability it's going to break that low and right there. Now I got stopped out at that break even. But you see now how it was the counter trade coming up. That's why I secured 80% at that yellow line. Yes, I wanted more, but it's the intended direction. It's still moving down bearish. Where it came down, that was that buying leg, counter trade buy to the yellow line. That's why I reduced my risk to break even, guys. Got to understand that. And now it could be the second bottom developing down in here, or it could be continuing selling, retest this, it's red, and then it's continuing selling pressure all the way back down there. And then that would be maybe an ideal area to look for a buy and to be maybe a bigger buy with bigger volume. Okay, so just to recap. I took that counter buy. Hopefully I explained that properly. I explained where I put my original stop loss. I explained the targets. When it came up there for those 40 pips up there, secured 80%, left 20% running with a break even. Unfortunately, you see it got a wick, it built back up, but it couldn't break that high. So, I wanted it to go higher, but the market has resistance, has a lot of sellers at that daily point of interest. Okay, and then now they're pushing it down. So now are they going to create a new low, break for a new low, and continue this move coming down? I've got alerts to sell up there if it ever gets back up there. But yeah, guys, so this is our first call back, guys. Tomorrow don't forget, we're going to do the same time tomorrow. So if you go to our website, guys, we've got some blogs available. It's pinned at the top of the YouTube channel for you guys. All this education that I went through is explained in more detail under its own, section. If we're talking about candlesticks, I talked a lot about support and resistance. I talked about some strategies today and things like that, counter trading, trading with the trend, all of those things. You can learn these. You can learn on your own over here, guys. There's boot camps, courses. There's over 100 plus webinars that are 2-3 hours long. I'm sure whatever your question is, you can learn in here. But if you feel that you want to come join us live on YouTube, join us live. But if you want to take your education a little further and, put some hours into this, we're building the back end for you guys to continue to learn. Free blogs available for everybody, and all of our live sessions are all on here, okay? So Dave is tomorrow morning, 8 a.m. That's the private Zoom. I'll be coming back in the afternoon for our evening Tokyo session, okay? And guys, the free Telegram channel is pinned at the top of YouTube for all of you guys. If you can let us know if you learned from anything on today's call. Is there anything that you want me to go over tomorrow that maybe you were unsure about, that you want some more clarification on? Let me know on Zoom, in the chat, on YouTube, in the chat, whatever it is, guys. And thank you to everyone who's new here that subscribed to the channel. We do appreciate you guys. You see, we kind of plateaued there during those 2 weeks holidays, but we'll get this thing bullish ignited again, and we'll be making new all-time highs here, and hopefully we can get this higher. Every trader continuing to learn. We learn and we earn together. See, guys, why now I look back at the trade, I journal my trade. I'm happy that I took out 80%. I'm happy that I had a break even, because if I didn't, I would have now lost. So you can see the psychology behind that. And now it closed below that zone, so the sellers are still in control. And then now I look back, so I did a proper counter trade. I know I was counter trading. I specifically told you guys that. So I was looking for maybe that one leg. I didn't. If the blue volume closed above that yellow line, we would be having a different conversation right now. Maybe the buyers would have had enough to push it all the way up to that zone. But I guarantee you, if it had that extra push coming up there, 99%, 99.9, I would be telling you guys, even with my 20% runner, I would be closing it out entirely right there. Why? Because that's the big bearish gap, the point of control from futures. So if it comes in there, I got to be happy. I'm up over 100 pips, and I have to respect that sellers could be there to push it back down, right? So I know it didn't happen, so I can't say it, but I know the way how I trade, guys. I wanted to originally sell that zone right when it opened, but if I was in a buy and it came all the way up there, I still got to consider, that there's big sellers there still waiting to sell there that are waiting patiently. So if I'm in a nice buy, that could be that true neckline up there, okay? So you can still see that this thing is still lower lows. Yeah, that leg that I just bought was a counter trade, 40, 50 pips, that's it. Short-lived. The yellow line holding up, big bearish engulfing, so we're continuing to push down. I've got this zone marked up right here. That last wick of that low of that candle at 1035, and there's kind of the bearish point of control of that bullish candlestick right there. So if it comes all the way down there, maybe that might be a good opportunity to look to buy. But however, you got to also know that you're still counter trading, even if you look for a buy there. There it came down, there it came back up. That was the counter. Now it's coming back down. So even if it comes down there, it could counter, and then look at what you're trading right into. You're trading right back into that block, and it could be pushing down. Then you look for the second leg. If the second leg's not there, you're still in a bearish leg, continuing to push down, right? Then the bigger yellow line, that's a daily position, right? This is just from a 5-minute candle earlier today. This is a daily, so I hold more weight. This is where I place more emphasis. If it comes down there, that's where I'm looking for a longer buy, maybe a bigger sizing down. Why? Because I know it's a daily point of interest, okay? But regardless, guys, I hope you guys, this was our first call of the new year together. Hope you guys had some fun. You learned something. Join us tomorrow. But if you guys want, join Dave in the live New York. Join our Discord. This is the Discord over here. I'll trade with the snipers. Learn and earn together. Education, all of that together, guys. And let's have a happy, blessed New Year, 2026. I just want to wish everyone a happy New Year. Let's have some health. Stay healthy, guys, right? Without health, we can't get wealth. And let's just stay healthy, continue learning, get your rest, Eat good food, nutrition, get some exercise, balance life, take care of your family, take care of everything at work, take care of everything. Trading is supplemental income, okay? Let's not get carried away and make this a full-time job when we're still learning, because it takes years and years and years of learning. So right now, for most of us, this is all supplemental income, okay? So this is to supplement our other work that we do, our 9-to-5s, our shift work, our going to school, our part-time jobs, all of that, okay? That's what trading is. It's to supplement our income until you feel confident and you have the experience to do this on your own, but you don't even need to. You can come in and trade for 1 hour, 90 minutes, hit your couple trades and get in and get out. And thank you guys. But that's it for me. I got to go right now and help my daughter. She's got a math test tomorrow, grade 4 math. We're doing the 2 times, 3 times, 4 times, 5 times multiplication. So I got to help her with that. We got to do 3 times 3, 4 times 6. I got to get her to ace a test tomorrow. So I got to go help her with some math. Guys, math will help you. You can see how it helps us in trading. Mathematics, guys, keep learning. Math doesn't lie. 2 plus 2 is 4, okay? And you can see, again, bullish candle. Where did it come up to? Yellow line, pushing back down. So you can still see that we still have sellers at these daily points of interest. The buyers are trying, but you can still see that they are not pushing it again above there with that volume yet. So it's still accumulating. Okay, let it accumulate. Let it come back up. Otherwise, we caught maybe a bearish trend right now, but it could be building and then when it breaks up here, that could be that extension to come through there, okay? Guys, I would love to stay with you guys and trade longer, but I got to help my daughter out because it is getting late. It's almost her bedtime. Got to just do some math with her, and I'll see you guys tomorrow. God bless everyone. Let's have an amazing year together. We're going to break bread together. We're going to learn together. We're going to have fun together, okay? And watch the news, okay? Remember, markets are very volatile right now. There's a lot going on. If I put it on the news feed right now, let's see what's going on. U.S. Secretary of State Rubio downplays military action in Greenland, okay? So they're already talking about military action in Greenland, okay? You know, this is coming from Wall Street Journal. This is not coming from me talking. So the White House is using rhetoric to pressure Denmark into talks. That's happening live right now as we're speaking. Acting Venezuelan President Rodriguez, no external agent, runs Venezuela right now. You guys know that there's crude oil futures settle at almost $61 a barrel right now. So we're continuing to watch. NYMEX is the New York Mercantile Exchange. Gasoline, diesel, crude oil, all of these are traded on here. COMEX, guys, is commodities exchange. That's your gold, silver, copper, your metals. So there's specific exchanges for specific securities, and they open it up at a specific time every single day. And keep an eye on your weekly inventories of crude oil tomorrow morning at 10:30, guys. So I had a fun session. I hope you guys learned something, and I hope you guys pipped and dipped with me. And I'll see you guys tomorrow. Thank you guys so much for joining. I appreciate all of you guys. Let's have an amazing new year and continue to take your trading to the next level, guys. Thank you. Have a great day, guys. God bless. Thanks, everyone on Zoom. Have a nice day. Enjoy tomorrow's morning with Dave, and I'll see you guys tomorrow. Have a great day, guys. Thank you, guys. Leave us a like on YouTube, please. And subscribe to the channel. And we'll see you guys tomorrow. And join that free Telegram channel. It's pinned at the top of the YouTube. Have a great evening. Thank you, guys. Thank you, Philip. Have a great day. Kraken, take care, brother. Rob, Lee, I'll see you guys. Justin, happy New Year, guys. See you guys tomorrow. When you're counter trading, pick and get guys. Have some rules.
Recording stopped.
Hey guys, good morning. Welcome to the live session of Stocks Number Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.